Good morning, ladies and gentlemen. On behalf of the Observer Research Foundation and the Better Than Cash Alliance, a big welcome to all of you, and especially to our guest of honor this morning, Finance and Corporate Affairs Minister, Mr. Arun Jaitley, as well as to Minister Arun from Punjab. Thank you for joining us here. When we set out, the Observer Research Foundation and the Better Than Cash Alliance set out to organize this digital payments conference, we didn't expect the sort of overwhelming and very enthusiastic response that we've got from a variety of stakeholders. Represented in this room are speakers and delegates from a variety of state governments: Punjab, Bengal, Haryana, Gujarat, Rajasthan, Bihar, Jharkhand. I may be missing one. We also have international delegations from Vietnam, Bangladesh, Myanmar, the Netherlands, Germany, Kenya, Nigeria, and again, I may be missing some. All here to learn about the Better Than Cash Alliance experience globally and its mirror image, India's domestic JAM initiative. So without much ado, I'd like to invite Ruth Goodwin-Groen, Managing Director of the Better Than Cash Alliance housed in the UN in New York, to make the opening remarks. Ruth.
Your Excellency, Minister Jaitley, delegations from all over the world, ladies and gentlemen. On behalf of the Better Than Cash Alliance members, I would like to welcome you to the first ecosystem convening for building an inclusive digital payments ecosystem here in India. It's a very exciting day, and we are delighted to see all of you. Thank you so much for coming. I have two quick points for opening remarks. First, I would like to congratulate the Government of India for its incredible leadership on building the foundation for an inclusive digital payments ecosystem. This is receiving global attention. It's the over 1 billion Aadhaar biometric IDs. It's the 240 million PMJDY accounts. It's the interoperable UPI interface that will allow every Indian to have access to a digital payment. This is recognized at the G20. We're an implementing partner for the G20 Global Partnership on Financial Inclusion. The high-level principles for digital financial inclusion draw on India's experience. At the General Assembly just last week at the United Nations, I was on panels where people were talking about India's leadership to build the foundation to achieve the Sustainable Development Goals. Whether it's a World Economic Forum, whether it's the Doing Business Index, the world is looking at India's leadership on building the foundation for an inclusive digital ecosystem that will make a big difference in the quality of life of everyone in India. So congratulations. My second point is to congratulate all of you who are here, because you are the trailblazers. You are the ones who are building the ecosystem out in a range of different ways. We heard from the different states are here today, and well, they'll be on a panel, but the private sector players who are really innovating to be able to make a big difference in people's lives. We all understand that it takes a whole ecosystem, that no one player can do it on our own, and so we need each other. So please take this opportunity to make connections between each other to be able to continue building out the ecosystem. So thank you so much for coming. And just finally, on a personal note, some of you know I was a postgraduate student here many years ago at the University of Chennai, and I first learnt about the struggles for people to have access to payments. Lakshmi was one of them, and sitting in an informal settlement with her, hearing that the bank wasn't interested in her, that she couldn't save up her money, her family took it. She had to pay back a loan and was having huge difficulties on her daily wages. Excuse me. So, but today, her daughter has an identity, has an account on her phone, can make a payment anytime that's convenient for her, and she has control over that account. And so, thank you everyone for coming today. Thank you for making a difference to Lakshmi's daughter, and thank you for the great conversations that are going to be happening today. Your Excellency, thank you so much for coming and joining us and honouring us with your presence today. We look forward to hearing from you.
Thank you, Ruth. We intended this as a conference, but also as a conversation between various stakeholders led by the Minister of the digital payments ecosystem in India and globally. In keeping with the conversational nature, I'd now like to invite Mr. Jaitley to make some remarks, and perhaps, if you're lucky, maybe answer a couple of questions as well at the end. Thank you so much, Mr. Jaitley.
Thank you very much for having invited me. We've had two parallel exercises in India, one which has gone on for the last 30, 40 years. Every time we had a budget presentation or a discussion on any form of economic policy, there was always a discussion on rationalizing subsidies. And as a part of poverty alleviation programs, at times as a part of pre-election announcements, the quantum kept increasing. And the quantum had its own large share on the budget of both the central and the state governments. Now, these unstructured subsidies, which were not targeted or intended only for the weaker sections, over years, while we kept having an academic discussion on rationalization of subsidies, in effect, across the country, these became unquantified amounts which were being given to an unidentified section of people. And in this process of elimination, of implementation, there were subsidies that the wealthier sections of the society got a larger benefit of it. So when you subsidized petrol, for example, those owning vehicles got a larger advantage. Now, this was one parallel discussion which was on, completely unconnected to this. During the last UPA government, this whole idea of a unique identity was created. Obviously, in a democracy like ours, views were expressed on all sides. The idea had not matured enough. So it was implemented initially as an executive measure. And the whole idea was that every Indian would have a unique identity. Unique identity could be used in various ways. There were apprehensions in public discourse which were mentioned. Some saw it as a move where even non-citizens, particularly illegal migrants, would start getting certain advantages. Some sections thought that this would be a huge encroachment as far as personal liberty is concerned. Could it be made a condition precedent for any activity from registration of property or for a government advantage? Why did it not have a legal or a statutory backing? So the government at that time decided to have a statutory backing. And it was a very curious legislation which was drafted. I'm not faulting it because we learned through experimentation. And the whole idea of the legislation was that there shall be a unique identity. This shall be the process, this shall be the features, this is how you acquire it. What do you do with it? The legislation was silent. So what would that unique identity be used for? And then we got into this side debate that the provisions relating to encroachment of privacy, the Supreme Court intervened, passed certain interim orders. And I think these two parallel debates, one relating to rationalization and targeting of subsidies, the other relating to having a unique identity and the advantage of this actually started converging. And the convergence was that you must have a unique identity. You must introduce several safeguards as far as encroachment of liberty is concerned or privacy is concerned, and make them tighter so that there is no sharing of information. And then you link it to what purpose is it going to be used for. And the purpose is that if you want an advantage of public revenue in any manner, through subsidies or through any other process, then the government would be entitled, state government or central government or any statutory authority or municipality would be entitled to insist that the unique identity be produced. And then as a result of a parliamentary process, finally the legislation which we did pass is that whoever the pith and substance of the legislation really was government revenue, government resources, that if anybody wants the benefit of public revenue through subsidies or any other support, then you can insist on production of that unique identity. And the procedure through which the unique identity would be issued became incidental to the main object of the Act itself. And I think the whole idea seems to have worked, at least initially, quite well. We now have various identities of various individual entities which constitute the JAM. The Janadhan accounts, which was by any standard an exemplary program, where almost 240 million people have been enrolled in a matter of literally weeks, if not days. And you had banking officials, banking correspondents, the freelancers that the banks hire, who went from home to home, targeted each individual, and therefore the banks have a huge data. Except in very rare cases, no Indian really today can say that he didn't have the facility of a bank account. Mobile telephony has picked up quite well. More than 80% of the Indians do hold a mobile phone. You've crossed the 1 billion mark, and that's another identity. And the Aadhaar card, you are well above 95%, closer to the absolute mark as far as adults are concerned in India. In fact, the inadequacy, if any, is relating to minors, because their enrollment is still lagging behind a little. As far as adults are concerned, you are almost moving to as close as possible to the final figure that you intend to target. And therefore, the legislation also has an element of flexibility in it, that till such time people have the unique identity, they can produce any alternate proof of identity itself. And therefore, I think the whole idea of A, targeting, B, exclusions, C, elimination of corruption, and D, directly reaching the bank account at a great pace, all these elements are present. And this won't only help us in the subsidies itself, it is now going to expand. Yesterday I had a meeting of the GST Council, and one of the issues which we discussed was, after the goods and services comes into existence, there are still going to be 11 states, 8 in the northeast and 3 hill states, Jammu and Kashmir, Uttarakhand and Himachal, where there are tax exemptions. So how do the geographical exemptions fit into an all-India network? So in Punjab and Haryana, you will have to pay tax, but in Himachal and Uttarakhand, you are exempted. And they are both a part of the same system. There are industry-based or even product-based exemptions which have been given in the states. Some may get phased out, some will remain. So this great question under the new setup, how will it work? And learning from the DBT system, the immediate unanimous decision was everybody has to pay tax, including exempted entities. And through the DBT kind of a mechanism, the exempted entities will get the reimbursement. And the easy solution, which it's all, the entire transaction can take place almost immediately. People won't have to wait for months or years. Time periods can be prescribed 2 weeks to get the reimbursement. And therefore, our experience has been that wherever you've implemented it, whether it's pensions or it's scholarships, or it's any other form of government payment, or it's the LPG, duplicacy, fake identities, non-existent people getting it, the entire gambit of corruption has been eliminated. It's easier, as in the case of LPG, if you wanted the top income bracket people to be eliminated, to eliminate them and then target it more to the more deserving people itself. Now, in effect, as we are now experimenting it in various areas, now somewhere the fertilizer is being experimented, somewhere the food is being experimented, I think one of the great advantages is going to plug leakages, it's going to eliminate corruption, it's going to eliminate duplicacy, it will help us in targeting those sections. Eventually, it also means that you are able to reach the targeted section more effectively and save money in the process, which can also be used for social programs or alternatively for other developmental activities. We are in the initial stages in various areas of implementation. And I think the apprehensions which did exist a couple of years ago have been to a large extent adequately addressed. And therefore, if any of these challenges or problems does come up, I think the system will be reasonable and efficient enough to take care of them. I do believe that now direct payments through this whole process of identification is slowly going to become the rule. And not resorting to it would really be an exception. It'll make the system more effective, and the whole idea that in reaching the weakest section, the leakages take place, and only a small fraction reaches the targeted entity, I think we'll be able to get over that curse. Thank you very much once again. That's all I had to say as an opening comment.
Thank you, Mr. Jaitley. The Minister has finished exactly in time. Sir, do we have time for a couple of questions? Or we have time for 2 or 3 questions. If you could keep them pointed and short and make them questions rather than statements. If I could ask the first question, sir, to what degree is India's JAM, Dhan-Aadhaar-Mobile model exportable to other emerging economies and developing countries? Has there been a level of interest there for an uptake?
Well, I think anywhere where you have social security or state support of any kind, and if you have a perfect model, fair enough. But any form of support in any of the economies, this is one of the models which is available. And therefore, in any economy globally, a government is entitled to ensure that its resource is effectively used. And therefore, the model, with or without modifications, certainly can be used elsewhere.
Anyone else with a question? Yes, sir. If you just walk to the mic. If you could identify yourself and ask us a short question.
Good morning, everyone. My name is Sandeep Sharma. I work with Airtel. It's really heartening to understand that 240 million account got opened at the shortest possible time. Would like to know from the minister that what are the efforts government is taking to make these accounts really functional, because I understand most of the accounts are also dormant.
That's factually not correct. You see, because when these accounts were opened, about 78 or 80% of them were zero balance accounts. And therefore, to operate these accounts, some incentives were given. And amongst the incentives were that if you operate it, there would be some automatic insurance and so on involved in that. And slowly, as the subsidy amounts also started coming into these accounts, along with the account, a rupee card was also given. And that card subsequently also had a facility of a marginal overdraft, which was made available. Now, these were all incentives which were given. And therefore, over a period of time, most of these accounts, more than 80% of them, have actually become functional. There are still dormant accounts, but the fact that it's a dormant account, the account doesn't lapse. And therefore, as the state support would expand in various areas, for instance, an account of a tribal could be dormant, but as more and more subsidy schemes through the DBT mechanism reach his system, then monies would get into those accounts. And per se, those accounts then would cease to be dormant. So you started with a huge number of zero balance accounts, and I think the figure is almost virtually reversed by now.
Right. Thank you.
Thank you so much. Okay, fine. One final question from you, sir, and then.
So you mentioned about, I'm here, sir. My name is Dr. Sharma. You mentioned about the UID and DBT. In fact, that was created to restrict the subsidies to the BPL families, though that did not happen exactly the way it should have happened. Today, sir, the subsidies which are there on kerosene and LPG, specifically LPG subsidies, we can totally get away because the LPG import parity prices are close to the current price of LPG supplies to the consumer point. Though kerosene, of course, still it is not there.
Question,
so
please.
could we not get away with the subsidy systems on LPG and kerosene in gradual manner?
You see, as far as, I think the two cases are slightly different. Originally, there was this whole question of, is LPG used only by those who are not poor? But then one of the studies that we've done over the years is that the traditional methods that the poor people used as far as the cooking medium is concerned, coal and wood and so on, the adverse hygiene effect of that is huge. In fact, when we launched this year in the budget, I made the announcement for this Ujjwala,
Right.
that 5 crore, there are 25 crore families in India. And therefore, we have picked up the
BPM.
5 crores, that's 50
BPL.
million at the bottom of the ladder. So 20% of the poorest families in India will be given an LPG connection at the cost of the state. This comes out of the savings that you've made by rationalizing the subsidy on the top. So in the using that medium per day, some of the medical studies that showed is almost like smoking 400 cigarettes. That's the adverse impact on the health. And therefore, we didn't want this whole idea or tagging that LPG is a medium which only the rich and the wealthy are used. And therefore, we targeted the weakest 20% that the state will give it to you, so you get into the system and the habit of getting it. So today, your oil prices being what they are and the gas prices being where they are, between the market price and the subsidized price, the gap has narrowed. But at some stage, the gap was very large. And these are all prices which keep varying in the market. So that remain. Kerosene, of course, is a different area. Kerosene in some parts of the country is used as a fuel. And in some parts of the country, in many parts of the country, it's being misused and there's a huge amount of diversion which has taken place. So states are making an effort. Mr. Cairo would know, Chandigarh, for instance, is broadly now trying to become kerosene-free. Haryana is moving in the direction of becoming kerosene-free. And therefore, because there's a lot of diversion which is taking place. And that's one of the next items which is on the agenda as far as rationalization is concerned. But there are still sections of the society which, the weaker sections which use it as a fuel. And therefore, you'll probably have to find a mechanism how to deal with the kerosene problem eventually.
Thank you.
Thank you so much. We're done with questions, I'm afraid. I'd now like to invite Mr. Sanjay Joshi, Director ORF, to give the closing remarks and the vote of thanks.
Thanks, Ashok. Honorable Minister of Finance and Corporate Affairs, Excellency Shri Arun Jaitley ji, Dr. Ruth Godwin-Gruen, Managing Director, Better Than Cash Alliance, and distinguished experts, delegates who gathered here. It's my pleasurable duty to thank the Minister for spending time this morning on actually a subject which is very close to his heart. And Ruth began by talking about the ecosystem of how an old ecosystem is needed to develop before you get into this stage of everything becoming cashless, moving towards cashless economies. And the Minister, I think, laid the foundation by describing in great detail how this ecosystem came to be created in India to the magical convergence of three things. And it was not magical. There was a lot of effort which went into it, a lot of policy shifts and changes which were required in the process. And it's still a process which is ongoing. But the ecosystem has been created which enables India to become the leader, the global leader in something which very much meshes India's technical capabilities, its whole thrust on inclusive development and growth, which is another very important angle of this whole discussion we are having today. So thank you, Minister, for in great detail laying this out. The complete disruption of commerce by technology companies has given birth to a whole new system of opportunities, unleashing innovation, unleashing a lot of changes in organizational structures across banks who are having to relook at the way they conduct business, banks, small enterprises, large enterprises. So in the whole kind of transformative changes which are taking place around us in the world today, I mean, every Indian today uses, I think, digital payments to a very large extent for primarily three things. First of all, it is online retailing. Second, it is some kind of shopping exercise. Third, of course, is buying Bollywood movie tickets. Is the most popular thing on which digital payments platforms are being used. So it has opened phenomenal opportunities where all kinds of tech companies, internet companies, mobile operators are all getting into this game. But it also needs a whole ecosystem of regulation to come in, and there are issues. It is a very fast-moving universe, and a fast-moving universe also tends to be chaotic at times. So when regulators are confronting new challenges as they try to keep up with new technologies, banks are having to sit up and reimagine their business models. Merely retrofitting onto old shops the same kind of systems does not work. So they have to start rethinking in terms of the whole ecosystem which is going to be created in this. And more importantly, as what the minister was pointing out, for us, I think the priority in India always has been that whatever technology we use, the biggest problem with technology always has been, traditionally has been, that technology that holds so much promise can also accelerate the pace of relative deprivation. It does not, and it has done so in the past. It's as simple a matter of today, whether it is access to health services in a connected world, whether it's education, whether it is banking, whether it is payment systems. The access to all these privileges, technology privileges, becomes a simple matter of whether you are connected on a lumbering 2G device or a 4G device or a broadband internet connection. So the thrust of the government to digitally include everyone as part of the Digital India program is one of the major things which has happened. So the largest growth in digital payments now is expected to come in the Asia Pacific, and India, yes, is leading the charge. So we are looking forward to a very interesting morning and afternoon of discussions today on these subjects. I'm thankful to all of you, and particularly thankful to the Minister for being here with us to spend this morning and kicking off this conference to such an excellent start. Thank you, Minister.
As we conclude the inaugural panel, I'd now like to invite Anahita Mathai and Samir Saran from ORF to present the Minister a memento and to have the panel posing for the Twitter selfie with the Twitter mirror, which is something we're doing for all panels. Thank you so much, and I now leave you to the next panel, which will be moderated by Ruth.
Ladies and gentlemen, we're about to start our next panel, and before I invite them to come up, just a couple of things. First, the panelists have asked that there be time for questions, so we'll move through the official conversation. If you have questions, please use the microphones and be very succinct in what you're going to say, because we are going to be keeping to time today. And secondly, that At each of the breaks, there'll be put up the email address that you've already sent for registrations that will be able, that you can give feedback on in terms of actions that you want to take or ideas that you have. So please don't hesitate to email us for real-time feedback. So without further ado, let me invite the speakers to come up. For those of you who like cricket, you know that hitting a 6, and I say this as an Australian, is a really big deal. So we have in this panel today people who hit 6s, who are the serious hitters in building a digital payments ecosystem. So their titles will come up as you go. If you want to look at their bios, they're online at the ORF website, so you can find out more about them. So I won't take time doing an introduction, we'll just get straight to the content. As you know, the objective of this event is to bring together these type of high-level decision makers, private sector players, and other stakeholders to debate and deliver solutions. So these amazing panelists who we have here are going to be taking up that challenge to get us going. So I'd like to start with an overview question for Joint Secretary Mishra. So, Mr. Mishra, we have guests here from all over the world, as you know, and your department has been incredibly successful on the PMJDY effort. So, what are the key success factors for a government department like yours to implement this vision? So, please do share with us. Please do.
Good morning to all of you. First of all, I'd like to thank the Observer Research Foundation and Better Than Cash Alliance for inviting me here for the first panel discussion on the digital involvement for the Better Than Cash Alliance. To my limited understanding, if I say this conference is for the Better Than Physical Cash Alliance to the Digital Cash Alliance, because ultimately we are replacing the physical cash what we count with our hand by way of the digital cash which is lying in our bank accounts in a digital format which we see on our mobile or any devices, electronic devices. The question which you have put is very relevant. It is a success story which not only the country but the entire world is celebrating. Let me start with one of the very key Indian wisdom thought process. In Sanskrit it is said, Swasti prajabhya paripalayanta nyayena margin mahim mahimsa go brahmanebhyo subha nityam loka samasta sukhino bhavantu. The limited way of explaining in English is that may people of the world be nurtured every day judiciously based on the effective knowledge and good intention that will make everybody prosperous and happy. That is the basic principle of the inclusion. In my opinion, when the Prime Minister, Honorable Prime Minister spoke on 15th of August 2014 and announced the Pradhan Mantri Jan Dhan Yojana, that was the speech for the financial independence for those people who are actually deprived of the financial services, those are not connected to the bank. And he caught the imagination of the committed energy of the every Indian citizen, in which the public servants and the bankers were the part. And everybody came forward with a full enthusiasm to implement this Pradhan Mantri Jan Dhan Yojana scheme. The result was that within a week's time, when it was launched on 20th of August, we reached the target more than that. And it becomes a success story which the Guinness Book of World Record recognized. And we got the certificate. You have pointed out what are the success factors, what are the factors actually which make this a grand success. I must thank my predecessors, those who are actually in the implementation of this particular Pradhan Mantri Jan Dhan Yojana, for designing this implementation mechanism so robustly, including the grievance redressal mechanism, which is still working so well. And that made the difference for making this government program a grand success. Because to market the product is very, very easy, but to market the government scheme is very, very difficult. But government launches many schemes, but they never design the marketability, how it should be marketed. Pradhan Mantri Jan Dhan Yojana is one thing where the marketability also has been inbuilt into that. The issue has been addressed by way of incentivizing the whole scheme by giving 30,000 rupees of the insurance at that particular time when this account has been opened. So this is applicable. The RuPay card has been distributed along with the Jan Dhan account. It has an inbuilt facility of 1 lakh rupees of the accidental insurance. It would get further simplified. Initially it was 45 days. You have to operate to make your account live and to get the benefit of the insurance. We have further modified it now. Within 90 days, even if you are doing non-financial transaction, your account is valid for the insurance. So these are some of the nuances which were built into the entire scheme to make it marketable. That's what the Honorable Finance Minister also told about that. The one basic thing which we have changed the entire approach was that earlier it was the village based, now it has been the sub-service area based, and the idea is that at least one person in each household should have a bank account, preferably the women, and that has been implemented. Second issue was that to have a multiple channel so that the people can reach to the bank. And one of the issue was that when the bank is not in a position to open the brick and mortar branch, then they must provide the services through the bank mitras. And to make bank mitra more viable, their remuneration has to be stable. A minimum remuneration was designed that at least bank mitra can get 5,000 rupees a year. So that make it sustainable. The third issue was that the bank mitra, which we are implementing and monitoring on daily basis, the bank mitra should be interoperable in nature. Because one bank mitra of the State Bank of India can give the services of the person who has the bank account in the HDFC Bank or the Punjab National Bank or Indian Overseas Bank. That makes it more, more robust mechanism so that people start having the faith that I can go to this particular person and I can avail the benefit of the banking transaction when I require. The third issue was that the bank mitra should be available 24/7. Earlier the scheme was that he should be available once or 2 days in a week. Now it has been made that every day the bank mitras has to be available. We are facing a difficulty. We are trying to geotag those bank mitras to see to it that where they are available or not. That we are going to implement this shortly.
Thank you. Did you want to keep going? Sorry, you had paused. Do you want to keep going or?
Just 2-3 points. And one issue was that the technology available with the banks were leveraged in a very big way. The CBS mechanism, the core banking system mechanism, actually get connected to the bank mitra at the last mile, and the bank mitra can open the bank account sitting there, which was not the case earlier. That made this scheme grand success. And the last one was the grievance redressal mechanism. We have the toll-free numbers. The state government has state level has a toll-free numbers. As on today, from 1st of April, we have received 24 lakhs call. And the pending grievances, which has yet to be resolved, is only 61 now. We monitor on a weekly basis through the video conference with each of the banks so that things are online, things are in control, and we are implementing that one.
Thank you so much for sharing with us those key success factors. I'm sure some people will want to be following up with you later. So
thank you.
Thank you so much, Joint Secretary Mishra. So that was where it started with an overview. So now I'd like to turn to Mr. Azbeh, who's the COO of NPCI. And so your mission at NPCI is to touch every Indian with a payment service, and you've largely provided the opportunity for that. So what are the next steps for you?
So just before going to the what are the next steps, NPCI has been around for almost 7 years, has been formed as a section, the society, Section 25, now Section 8 company, and predominantly the vision of RBI and the government and implementation done by the banks, right? So we believe we are a service provider to the banking and the payments ecosystem. We process mainly the retail payments transactions. Approximately we have reached initially when we started NPCI, we were about 100 million transactions a month. Now we are reaching about 800 million transactions a month. So that's like a 8x kind of a growth in last 6.5 years. We are processing most of the retail payments right now, be it checks, interbank ATM transactions, the National Automated Clearinghouse, which is ECS equivalent. We are processing. We started with IMPS. We started with AEPS. We started with the DBT platform, which Sir was talking about. And we are trying to provide the service quality, and that's what is in our DNA. That we should be able to provide service with SLAs committed to the banks, so that the banks do not feel like this is a mandated entity and the government entity, or those kind of feelings do not come back inside the system. We believe giving the innovative products is our key objective, right? And that's why we have been working on IMPS, one of its first real-time payment system in the world. We have launched UPI. Obviously, it will take some more time to stabilize, but so we have been working on the retail payments, trying to service banks, trying to service payment ecosystem. When you look at UPI now, from a next step standpoint, looking at the growth of the smartphone, looking at the growth of the efforts by the RBI and the government on the digitization, we felt that this is the right time to launch a mobile-based, truly mobile-based payment system, because earlier IMPS was more created as a platform, but UPI is more like a smartphone-based payment system, and it's a collaborative effort from the banks, NPCI, iSpirit, some of the iSpirit guys are here. So we have worked last 2 years to create a mobile payment system. Obviously, it will go through some more changes in next couple of years, but we believe it has a potential to kind of touch every Indian, what our mission is, and hopefully next 3 years, at least half of the country having the smartphone kind of creates the base for UPI to go to every Indian, right?
Great. Half of the country with a smartphone and everyone being able to make a payment.
Yeah,
so that's 2 years, you reckon? So we'll see if he's right. So that's set the standard. So we're going to turn to Ms. Rupa Kudra from Omidyar Network now, who is an investor in some of those innovators that will be building on the work that NPCI has done. So Rupa, you probably see better than anyone. You have a bird's eye view of what from an investor's perspective, of the new innovations that are coming up. And you have said that you're seeing an ecosystem of entrepreneurs that has never been as conducive as today. So tell us about the 3 most exciting innovations that you see coming to build the digital ecosystem.
Great. Thank you, Ruth, and good morning, everyone. In most of the discussions around why digitization of cash is important, the typical arguments we hear are, it will lead to a significant savings in costs, for example. So as a nation, the costs of managing cash for a country like India are $3.5 billion. We talk about increased security. We talk about reduction in corruption. So the whole goal of the digitization of cash is to bring down the level of coins and notes in the economy from the staggeringly high number it is today, which is 12% of GDP, to much lower levels. Bear in mind that even countries like Brazil and Mexico have numbers which are close to 4 to 5%. So these are really the traditional and the first arguments made in favor of digitization of cash. But when we at Omidyar Network think about this, we think of payments as being the digital rails on which a whole edifice of innovative products and services can be built, which can bring into the fold of formal financial services millions and millions of people who are outside the fold of formal financial services today. So that is the lens with which we look at it, and that is why we are supporting entrepreneurs in a whole range of areas. So starting with the whole space of payments itself, I think, you know, NPCI just now talked about the fantastic infrastructure that they have put into place. But in order for digitization of payments to truly take off, what will become very important is the last mile. To get adoption from the small vendors, the small merchants, that is really going to ensure that the digital economy moves down to the most far-flung areas of the country and to the smallest micro entrepreneurs and each and every individual. And today we see a whole slew of entrepreneurs, whether they be some of whom are present in the audience today, whether it be BeNow or SpeedPay or Paytonic, who are doing amazing work, getting your milkman, getting your newspaper man, getting your fruit vendor, getting your vegetable vendor to register as merchants, and they are bundling in other offerings like collection services and accounting services, which will make their entire life easier and make the whole thing more attractive for them. So that's very exciting to see. At the other end, and not in India, there is this company that we work with called eCurrency Mint, which is actually has an offering which will enable central banks to issue digital money as legal tender. So, you know, that's the other extreme to which it can go. It may be a little futuristic, but there are already banks, central banks all over the world who are beginning to show interest in the concept. So, you know, so right from payments at the micro entrepreneur level to central banks looking at digital currency is one set of entrepreneurs in the payment space. That's exciting. The second set of entrepreneurs that we are very excited about is entrepreneurs who work to increase usage of bank accounts. We just talked about the fact that 243 million bank accounts have been opened, and yes, indeed, adoption or usage of these accounts is increasing. But can more be done? And let me give you an example. There's an entrepreneur, but there's a company by the name of Juntos, which essentially offers an automated, real-time, two-way based SMS conversation to newly opened to customers who have newly opened bank accounts, and help them in understanding what they can do with the bank account through a two-way conversation. And actually, the finding is that people are embarrassed to go and say, I don't understand how to operate my bank account, or they have that fear. But the moment it becomes faceless, they're much more forthcoming, they ask questions, they get more engaged, and the platform adapts, you know, the content of the messaging and the frequency of the messaging based on the kind of responses that they are seeing. So I think a whole slew of entrepreneurs working in the adoption space is very exciting. And the third and final space which we find very exciting is the use of alternate data to make credit assessments on people today who do not have a credit history. So today, 3 out of 4 adults in India carry a mobile phone. And every time each one of us makes a phone call, sends an SMS message, accesses social media, makes a payment, does anything with a mobile phone, we are creating a digital footprint which provides rich data, which gives us insights into that individual. And again, we are seeing a whole slew of entrepreneurs there, and we call these companies big data, small credit companies who use these data to make assessments. So in India, we have, for example, we work with a company called Zest, which is working here, but there are many others. There's Capital Flows, there's Indify, there's so many other companies who are entrepreneurs, who are Lendo, coming up with innovative ways of using this data to make assessments of people who are underserved. And the potential of this, we believe that using alternate data It is possible for banks to access anywhere from 150 to 175 million new customers, which is significantly tripling, which is tripling the customer base they have on the retail side today. So that is really the potential of how big this can become. So these are the three categories of entrepreneurs, Ruth.
Wow, those are three very exciting categories, Rupert. I'm sure there'll be lots of questions about those kinds of innovations that are there, from the small market vendors to digital fiat currency, from usage of accounts as well as alternative data. Yes, alternative data is super exciting to really significantly increase use of accounts. So look forward to hearing a bit more about that later. Thank you so much. So I'd like to turn to Mr. Bipin Singh now, who's the CEO of MobiKwik. So those of you who don't know, MobiKwik currently has 35 million users and has 100,000 of those small retailers that Rupa was talking about. And you're the largest independent mobile payments operator here. Although there's others that are bigger, but you're the largest independent one. So tell us, there's a huge opportunity digital. We've heard from NPCI as well as from OBDR talking about the huge opportunity for mobile digital financial services. So tell us how you're thinking about the future opportunities to be an active player in the digital payments ecosystem.
Sure. So thanks, Ruth. So actually, there's an interesting anecdote I always like to talk about. You know, when I was young, a kid, my father used to take me to the bank once every month. And, you know, many of my peers have heard the same story. And there would be a passbook which would be used to update the bank account or to do some transactions, whether deposit cash or withdraw cash. And, so many years have passed away. I think more than 20 years have passed away. He doesn't go to the bank anymore. He just goes to the ATM and withdraws cash. So you see, what has happened is that we have created a lot of infrastructure, including ATMs, including NPCI, which is more recent. The backend and the governments have done a great job so far. But as far as consumer behavior is concerned, and consumer adoption is concerned, 90 out of 100 people still go, even if they have a bank account, they just go to an ATM and withdraw cash. And what we are doing at MobiKwik is to solve for that. What we are trying to do is to find how we can get millions of users to leave their habits around cash and start using, payments. So we, a lot of us, we talk about payments in very conceptual terms, in very infrastructure terms. But really, a person who is just walking on the street, doesn't really care. I mean, for him or her, paying with cash is the same as paying with a phone or, paying with a card. So ultimately, I think it boils down to creating use cases. If there are use cases which offer a fundamental value to the end customer, then the customer will adopt electronic payments. And that's what we believe. So what we do is, we have an app which we want every single customer, every single person in India to have. Currently 35 million users have it. With that app, literally today, I believe you can live your life and you can leave your wallet back at home. You can leave this wallet back at home and just use this phone. You can pay your bills, you can recharge your phone, you can pay for your television, you can transfer money to anybody in this country. You can shop online, you can buy air tickets, you can buy hotel tickets, you can buy a pizza, you can go to a neighborhood pharmacy and buy medicines. You can go and buy this shirt from one of our merchants, using this phone. You can go to grocery and do your weekend grocery. So I think the direction that we are taking is, and Rupa also, hinted towards that, is we are trying to create a rails, but our rails are slightly different in the sense that our rails start with the consumer and the consumer adoption. And when consumer gets into the habit of doing transactions directly from your phone without using cash, doing online transactions, it's a great value add because you don't have to go anywhere. It saves time, and that's the value that we provide to the customer. And of course, there is a lot of security because you don't have to carry cash. And we believe that once this rails is built, 200, 300, 500 million users are on these rails, then there is a scope of building a lot of additional financial services on top of these payment rails. Credit is one example that can be built on because this whole rails will generate a tremendous amount of data. And of course, we need a lot of data scientists to understand this data and use this to make credit decisions much better, much faster than what the traditional credit decisions have been taken either by banks or NBFCs, and potentially make a system available to people just on the phone. And then there are other things. Potentially what we are looking at is, your money may be sitting anywhere. It could be sitting in the bank account, or it could be sitting, for the term that I like to use is, it may be just sitting in the cloud somewhere. You really don't care. All you care about is how you access that money and how you can use it. And if you can borrow money, or if you can pay somebody, and if you can invest and generate returns using that money, all using your phone, that is the future that we are building.
It's remarkable. We have the builders of the rails, we have the investors, and we have the companies who are all saying the same thing, that the future is going to be mobile, and it's going to be in people's pockets that they can use very easily, whether it's from vendors or in terms of accessing others. So let's hear from Professor Shah at the National Institute of Public Policy, because your job is to think about what is needed to promote payments through digital means. And you advise the government on this financial policy. So listening to this future, what do you think are some of the key regulatory and political challenges that will come as this rollout happens?
Thanks. Does this work? Yeah. Thanks. I want to make a couple of points. First, economics is the dismal science. So my job is to say unpleasant things and uncomfortable things. I see a lot of happiness and optimism surrounding this subject in India today, and I just want us to take 2 steps back and say that it is not yet time to get excited, and it is not yet time to declare victory. We are very far from any plausible definition of success. For example, the data shows that if you divide cash in circulation by GDP, then India is essentially the #1 or #2 in the world. So we are the least effective in modernizing our payment system. Similarly, if you measure the number of transactions that take place in the country and you ask what proportion of them have moved to an electronic mode, we are essentially at the bottom of the landscape. There are many African countries who are doing better than us, and so on. So I feel a little uncomfortable at the level of happiness in this room. Okay? I think it's good for all of us to be grim and somber and unhappy that why is this great country at the bottom of the league tables in a very important dimension of what we ought to be doing. Okay, all of us share that objective. I'm 100% on board on the objective. We badly need it, but let's not start celebrating just yet.
That's a great point, Professor Shah, because where we are right now is obviously not where we're going to be. And so it's thank you so much for that reality check. So would you like to prescribe how we're going to get from the bottom to the vision that we have?
Yeah. So where have we gone wrong, and why is this not working, and what should we do different? I want to take you back to telecom. Remember a time when the Department of Telecom was the operator and the regulator and the entry barrier. If you wanted to start a mobile phone company in India, they would tell you, no, we're going to do it. Why should you do it? People who thought of entering the business were uncomfortable dealing with a conflicted power structure because the Department of Telecom would block your business and tell you what you can do and what you can't do. And the way out was really not a government program. The government program was a village telephone scheme where they were dreaming of putting one phone in every village. Okay, that was the thought process of what the government system was doing. The way we made progress was to separate service provision and regulation. We got TRAI, who is unconflicted. TRAI doesn't run systems. TRAI is a fair, level playing field regulator who does not have his hand in the till in trying to compete with the people that he's regulating with. We got private players, we got foreign players, we got new technology. No government program could have understood that the explosive progress was going to come from a prepaid telephone where there would be little pieces of access points in every pawn shop and chai shop all over the country. I say this with hindsight. It's easy to look back today and say we got a revolution in Indian telephony. It was far from obvious in the mid-90s and the early 90s when these debates were being played out. There were some principles that produced progress, and those principles were open up, bring in private and foreign players, have interoperability. Look at the kind of fights that are taking place right now about Reliance Jio and the ability to call freely from every player to every player. Nobody should be locked out from the system. There should be interoperability regulation. There should be open access. And the levers of policy should be in unconflicted hands. This is the recipe that we should bring to payments.
So, would you like to comment?
No, I fully agree that the situation is not good right now, but I think there's a great opportunity. And the way I look at it is there are so many startups which are coming, which will bring in the innovation on the last mile, right? Very similar to Bipin was talking about the QR code reading, the merchant payments, and asset light model, which is going to the last mile. If India needs 10 million merchants or 20 million merchants, that's not going to come through the existing process. It's going to come through the mobile route. And the startups and the innovative products will really, kind of scale this up in a big way, right? Now the base structure is ready. Whatever Ajay spoke about, the interoperability and the base infrastructure regulation, the payments banks are there. The large 4 telcos are running the payment banks, right? There are wallet providers. So now I think we can only look up, right? That's what we believe in NPCI.
So, did you want to make any response? Yes.
If I may, I worry about these issues. I was very disappointed when the UPI announcement came and we were told that MobiKwik can't be part of UPI. I'm very disappointed that we all assume that upstream of all the technology and IT will be the banks, and that doesn't have to be. Why can't technology companies directly connect into RTGS and so on? So I think we've got a whole structure of entry barriers. It is the Department of Telecom before 1999. We should question every element of the access and the entry rules. Google, Facebook are potentially payment players in India. They are not even trying to be in this space because of the licensing and regulatory landscape that we have been given. All of us are sending SMS to each other. We don't even think that we can put money on top of an SMS. So I think the innovation will come from the people that are potentially not even in this room, who have been shut off by a licensing and regulatory system. There is a chilling effect. People are not even trying because they know that if you go ask for permission, they're going to say no.
So what I'm hearing you saying is that, yes, the only way is up, but there are still some significant barriers to be able to really make a difference. Rupa, you work a lot with fintech innovation, and do you see these barriers as well?
I think what we are seeing in our work across the world is that regulators are now figuring out new ways to engage with private sector innovators and startups in a manner that enables them to have oversight over innovation as it is happening. And this whole concept of regulatory sandboxes, where the regulators work with an innovator to test out a concept using the sandbox as a concept which is used for testing in technology products traditionally. And this takes place in many forms. So one is that the regulator and the innovator could agree that for limited field testing of that product, or there could be an agreement saying that, you know, till there is a commercial launch, the rules and regulations will not apply. And we are seeing signs of that happening in different parts of the world. What this enables is the regulator to be abreast of innovation and have the ability to exercise control, at the same time allow the innovators to flourish as well. So I think concepts like this, I think, will go a long way in making regulators feel comfortable and not shutting out. I think Ajay pointed out a very important issue, which is that it is not at the end of the day, even now, a level playing field. And I think some approaches like this could be the way forward.
You're nodding, Professor Shah.
Yeah, and to continue that, for example, the UK Bank of England recently has an announcement that non-banks will be inside RTGS. And that's exactly the way to go. Airtel should be inside RTGS. Why should they have to go through anybody else?
So we've got lots of interesting opinions here. We have Joint Secretary Mishra, yes.
May I add this, what the apprehension is all about? Recently, the RBI is in the process of mitigating the risk in the digital payment system. And the discussion is on to have some regulation and to have that type of regulation where all these innovations are actually assimilated. RBI has also constituted a committee to look into the financial technology innovation, so that how it can be integrated to the current system and it can be made more viable. So this all efforts are on actually on this side.
Excellent. So they're working on how to address these innovations. So thank you for that clarification. So we have 10 minutes for questions. We can keep going. Please do stand by the microphone. We'll take 4, I think, questions altogether, and then I'll ask the panel to respond to those. There's lots of things. So, gentlemen, please do stand by the microphone, and we'll take 4 quick questions. Yes, sir.
Okay, I'm General Chopra. I just want to refute the last speaker regarding unhappiness. I'm a platinum veteran, and I'm a very happy man. The fact that I'm here means I'm happy with URF. Okay, you gave an anecdote. I'll give a very small anecdote. I carry cash in my pocket because if I get stranded on the road, I need cash. This Paytm business is not going to help me. But I want to raise reality check of 3 issues. One, in India, we are mostly in an unorganized sector. Whether it's shopping, whether it's the cart that comes home, they all deal in cash. I don't know what MobiKwik would like to do about this unorganized sector. Second, why don't
I think that's 3 questions. Can you just keep it to 2? Because other people have questions too, sir.
Okay, and something should be done with Paytm with taxation, and the post offices should be incorporated in all that the minister talked. Thank you.
Okay, great questions. Yes, sir, at the back there.
I'm Atul Bhardwaj. I'm a tech evangelist, so I'm here.
Tech evangelist, yes. Okay, great.
So I would, we are talking in terms of bank accounts, we are talking in terms of UAIDs. When we are talking digital money, we can't be talking of bank accounts. We've reached a stage where our device can be married to our mobile number. We don't need a UAID. If I make a transaction from my mobile phone, the receiver knows from which mobile it has come now, or from which device it has come. So therefore, we are moving into we are talking of death of banks with digital money. We can't be talking banks. We are going to provide banks to every individual now. So every mobile phone is going to be a bank in the coming days.
So your question is?
My question is, when is the government thinking of actually doing away with paper money?
Doing away with paper money. What's the time frame? Okay, we've got some serious... So these 2 questions here, and then we'll ask the panel to respond. Yes.
Hi. I'm Badal Malik. I'm the CEO of a Catalyst, which is a new organization focused in payments. I had a question about UPI in particular. I do think it's a game changer, both in terms of flexibility it offers as well as cost. But my question is that cost, is it cheap enough, right? And my question is to Dilip. B2C, C2B payments are about 10 basis points lower than debit. And I just think that we have an opportunity here to actually democratize payments by making it much cheaper. And I'm just curious to know what the logic of the pricing has been. And just following up on that for Bipin, I also am curious to know what is the role of a wallet in a UPI world? Because the wallet business model right now is 1 to 1.5%, right? For merchants, and UPI has the ability to disrupt that. So I don't really see the future of the wallet, and I'm struggling to envision.
Great. So we have questions on costs and well on the wallet, as well as a question also for the unorganized sector, and then we had the question about the time frame for doing away with cash. Last question.
Good morning. My name is Sunil Abraham from the Center for Internet and Society. When I asked the question about competition for the national payment switch, then some people say, but there are 50 other countries that have national payment switches. So is it that we are following some kind of global trend, and what are the pros and cons of doing so? And when Professor Shah talked about competition in this kind of settlement infrastructure, should that be the same whether it is transactions between private citizens, and what about the huge amount of DBT transfer through the UPI? Should that also be opened out for competition? Thank you.
Okay, Professor Shah, you can save up that question, right? I'm going to go first to the direct question about cost to MPCI.
If you look at the today average cost on the average interchange which is paid by the acquiring bank for the debit cards in the range of 65 bips, right? Which leaves about 10 to 15 bips for the acquiring entity. On UPI, we just to ensure that the acceptance grows, we have ensured 35 bips is kept for the acquiring irrespective of the transaction amount, right? So which is a kind of going the earning on the acquiring side 3 times than what it is right now. However, looking at the the debit card both and also an UPI both work on an account, right, which is finally a bank account. We didn't want the arbitrage between the two payment instruments from the merchant cost standpoint. That was the initial design. However, I'm sure once the volume grows, and I'm sure the stakeholders will sit down together and look at lowering the cost. But the acquiring side revenue, right, to increase the acceptance, it's at least 3 times than what is today for the card business on the UPI.
So as volume goes up, price is going to come down.
Yeah,
that's
absolutely.
a promise.
That's how it works.
Keep him to that, right? So Professor Shah, would you like to take the question about the settlement issue?
Yes, Sunil talked about competition in the switch business, and I think all of us would agree that yes, of course, it's good to have competition. As an analogy, there are smaller countries with 1 stock exchange, 1 depository, but our elders in the Department of Economic Affairs forced interoperability and competition into this business. And we have today 4 major exchanges and 2 depositories and full interoperability. So I would just harp on 2 points. One is interoperability, exactly as has been done in the field of telecom. Every player should have complete access to every customer of every player. And a standard trick that is being used by incumbents in India today is to block off competition by blocking off access. And the foundation of regulation should be interoperability. And the second is that, yeah, the switch business should be very much competitive. There's nothing special about the switch business that there should be only 1 switch. For all you know, there will be 20 technology guys who will run switches. There's nothing wrong with that. We should have an open environment.
On the interoperability issue, the Better Than Cash Alliance has done a lot of work on how to best reach everybody for an inclusive payments ecosystem, and interoperability is an absolutely essential factor for being able to reach everybody.
So I think the India stack work and the UPI work is philosophically bang on track. I was just very disappointed at what came out because it actually has choked off a large fraction of this room.
So there was a question for MobiQuick about how to work with the unorganized sector. Would you like to take that?
Yeah, so, thank you for the question. So I think, you're right, India is, in terms of businesses, in terms of merchants, more than 90% is unorganized. But I think India is also a very big country, both from a, number of people perspective as well as access point of view. So I think companies, the reason that electronic payments have not penetrated deep into unorganized sector, is a chicken and egg question. Have they not penetrated because they are not available at the merchant, or have they not penetrated because there has never been any demand or enough demand? So our perspective on this is very clear, that until and unless there is a strong consumer demand, creating access on the ground in the unorganized sector can be an exercise in waste, can be an exercise in futility. So therefore, at least the path that we have taken and many others are taking is, where can you create habits? And the best habits can be created with repeat use cases, which are online shopping, online bill payments, and then going into organized retail. Because, people around here, if they don't stop using cash, then there is no hope for people who are, sitting, let's say, 100 kilometers away. So I think the habits first need to change in urban India, in the semi-urban India, from a consumer point of view, and create enough traction both for online, organized, and then followed by unorganized, which of course needs to happen before electronic payments happen in a big way.
So thank you. So there was one question about time frame for getting rid of paper. I think what we've heard in answer to that question is there's two very positive messages. One, the huge opportunity that everyone has raised, both from the building the rails and the new entrepreneurs that are coming up, but also the caution that unless all the barriers are actively addressed, the optimism is not going to be realized. And so we have to actively address those barriers so that this optimism or happiness can be fully realized, and then we'll hit a time frame that our tech evangelist can keep us to. So with that, I would like to invite you to please join me in thanking our incredible panel this morning. Oh, you wanted, sorry.
I think I'll have to address the question of the general which he has raised about the integration of the post offices. Let me say that the post offices has been given license by the RBI as the Indian Postal Payment Bank, and they are going to utilize 1,33,000 Gramin Dak Sevaks and 1,55,000 the post offices as the outlet for the banking services. And in 3 months' time, they are going to actually implement by introducing 40,000 micro ATMs with the Gramin Dak Sevak and 1,000 ATMs in the post offices. And next 6 months, it will be fully operational.
So sorry, I didn't see you wanted to, forgive me. Thank you. You had all those numbers at your fingertips, so thank you for that clarification. Now, will you please join me in thanking the incredible panel? Thank you so much.
Good afternoon. It's now time for, if everyone could just settle down, please. It's time for a short, crisp, high-level conversation with two key policymakers and policy changers, really, in the digital payments ecosystem. Mr. Saurabh Garg, to my extreme right, Joint Secretary, Investments, Department of Economic Affairs, Ministry of Finance, and Mr. Piyush Kumar, to my immediate right, Joint Secretary, DBT, Direct Benefits Transformation, Cabinet Secretary, Government of India. So, without much ado, I'll start with one or two key questions for both of them to answer by turn, following which we'll open it up for questions from the audience. So, if I could start with you, Mr. Kumar, what is the status of the DBT mission? We've heard about some aspects of it this morning. And how is it aligning with the overall digital payments and financial inclusion vision of the government? If you could offer us an overview.
Well, yeah. First of all, thank you for having me over for this session. It is quite an interesting conference. I was listening to the previous session and the format. It is really interesting to see, lot of enthusiasm around financial inclusion, digital payment ecosystem in the country. In the DBT mission, the direct benefit transfer, we are closely working on this point, because very early in the curve we realized that direct benefit transfer, which means transferring benefits to the account of beneficiary, is only half work done. And unless we have the financial inclusion which is able to deliver the financial services to the doorsteps of the people, the objectives of direct benefit transfer in that sense will not be fully achieved. So it is from that point of view that the digital payments and various payment gateways and quite interesting things which are happening around the subject becomes very important. Now, very quickly, DBT started in 2013. I believe in the morning session also it was referred to, and we started with certain limited programs under from Government of India where benefits are directly transferred to the citizens. But with the in the present government, with the grand success of the PMJDY, the drive which initially came up in 2014, and by January 2015 we realized that with the impressive performance under the PMJDY program, the Jan-Dhan Yojana, the coverage of bank account is has reached optimal level in the country, and now is the time when we need to reach across to people through for all the government services. So it was really in that sense that last year, February 2015, the direct benefit transfer was revived in some sense, and it was made applicable to whole range of government services, not only limiting to the scholarships or welfare programs, but across the services, across the state governments to all the programs. So today we have a status starting from 27. Today we have about 74 schemes where DBT is being implemented. As we talk, we have almost crossed 1,40,000 crore of total DBT transfers in the country, covering nearly about 30 crores or 300 million beneficiaries across different sectors. So the initial result itself has been quite promising, but we still feel that this is only the starting step, and much larger scope of this can be unveiled with the digital payment systems and post-payment banks and different various other developments that are happening, and that was talked about in the previous session.
Thank you so much. My first question to Mr. Garg. DBT, of course, is part of a broader ecosystem of the government and a broader architecture promoting cashless or a less cash economy. What are the motivations and objectives of this? What have been the opportunities and challenges in your
Briefly, if I would like to say on why the government is pushing digital payments and transactions, I think there are 2 or 3 objectives. One is the cost of managing cash. There are a number of costs. There's the supply chain management, the logistics, the printing. I think there are estimates which say that the banking system as a whole spends more than 22,000 crores in terms of just transportation, security management, lockers, treasury chests, etc. Apart from this is the costs of printing cash, etc. So that's on the system. Then for the consumer, there are risks of carrying cash. It might get stolen. It might he might not be able to use it when it is when he wants it. He doesn't have the cash. So there are risks related to that. And apart from this is the fact that cash has risks related to counterfeiting of money. And what we ultimately want to do is ensure that every person should have the convenience to be able to use a non-cash method as easily as cash. So there should be no extra costs for non-cash. So the costs of cash have been internalized both at the individual and the corporate level. So there are costs related to cash, but it doesn't seem apparent. On the non-cash, unfortunately, those costs are apparent and they're very clear in terms of the MDR charges or other electronic payment charges that there are. So the objective is, number one, to ensure that the consumer has different means of payments and cash should not be the only one's mean. Second, the convenience should be as much as cash. In fact, non-cash should be more convenient than cash. And the larger, it also helps to ensure that transactions have an history. So whether it's tax avoidance or any other illegal transactions, it's bigger. But that's, I think, a minor portion of the entire thing.
My next question, Mr. Kumar, is in terms of DBT's, our next session after this is on the states, digital federalism. So in your experience, how have the states taken up the challenge of direct benefit transfers programs? And how enthusiastically have they adapted? Because in the end, this has to percolate down from the center to states to, frankly, even municipalities and panchayats.
Oh yes, there has been overwhelming response on DBT side, and I'm happy to tell you that while the DBT mission in Government of India is only looking at policy level interventions to make DBT happen, but it is really in the states and the districts and in the field that ultimately DBT has to translate. And almost all the state governments are very enthusiastically looking at DBT to happen. In fact, we have been in communication with the state governments. We have requested the state governments to set up DBT cells to coordinate their part of DBT activities in the state. And almost 27 out of 36 states and UTs have already constituted DBT cell. We had an interstate council meet, which is the highest constitutional body. The Prime Minister, Honorable Prime Minister, and all the chief ministers are a member there. On 16 July, the 10th Interstate Council meet was there, and one of the very important agenda items out of the 4 items, nearly some 3-4 hours was spent on DBT, direct benefit transfer itself. And almost all the state governments, in fact, all the state governments did endorse DBT. Of course, there are few concerns which the state governments have been raising. One is the, the connectivity issues with the broadband and the quality of NOFM and, the timeline that it is going to cover. And second, of course, has been the financial inclusion, the part of what we are discussing as digital payment systems, basically to be able to reach across to people in the remote areas, in the hinterland, how well we can provide these. So these two being the larger, constraints which states are looking at. Subject to those, most of these states are doing their own experiments. We have examples from, the UP, which had done DBT in seeds location, to Andhra Pradesh, which has almost entirely moved on to DBT, to Kerala, Haryana, Punjab, Maharashtra, Chhattisgarh, Jharkhand. Almost every state is looking at different aspects, and the scope is so huge. The transformational power of DBT in that sense is being recognized, and everybody is enthused around that. So it is really from there that these DBT innovations are coming, and as a DBT mission, as a Government of India level, we are looking at the larger enablers to put in place.
Mr. Garg, this is a bit of a tricky question. In terms of digital payments and cashless or less cash mechanism, which user groups would you say have been the most enthusiastic in terms of adopting this, and which have been the least enthusiastic?
At present, if you look at it, the substantial bulk of the transactions domestically are still in cash. There are estimates that range that the cash transactions are still over 90%. But going forward, the areas where we feel that the growth will be maximum, and that would also partly answer your question, would be 3 or 4 areas that we are focusing on. One is that the government itself should make all payments that it is doing on a non-cash method. DBT, my colleague has already talked about, but any other payments which are made either to its own employees, to contractors, to any other beneficiaries, should be on a non-cash method. That could include, possibly as we move along, mobile wallets and apart from bank accounts. So that enablement is an area that a large portion has been done, and that would be one major user group. The second is, again, in terms of the government, all receipts that the government receives, whether it's going to an archaeological monument and buying a ticket out there, or putting in a tax payment or a water or a electricity bill payment, it should be enabled by all non-cash methods. And I'm again repeatedly saying non-cash because it's not that only cards are the only non-cash method. There's of course electronic transfers, there are mobile wallets and mobile pays, and then you have a whole set of mobile apps. So every method that exists for a non-cash needs to be enabled from the government side, both for payment and receipt. The third area is in terms of ensuring that if I can put it, the hurdles or the speed breakers that exist on the non-cash side, either in terms of acceptance infrastructure, because in case, let's say, you go to an archaeological monument and you want to pay, they should be enabled by having a point of sale machine or some such method by which they can accept a non-cash. So ensuring that those hurdles are taken care of, and those point of sales machines need to be enabled so that they can accept different kinds of, they can accept a card, they can accept a mobile payment, or they can accept any other kind of system that might come up as we move along. So ensuring that those point of sales machines exist. And then fourth is the larger, looking at the legislative point of view on what kind of barriers exist to expansion of non-cash, whether in terms of regulations regarding involvement of non-banking organizations in the payments ecosystem. So I suppose it is the expansion of the entire system to enable it to accept non-cash would automatically, once non-cash becomes as convenient as cash, I'm sure that the different consumers would move towards it. And we're very fortunate that the number of mobiles that we have in the country nearly now equals nearly the number of people. So perhaps that might be the mode that we need to ensure that mobiles which have required no education for people to use, if we make it as simple as to be able to do it through a mobile, the usage and the uptake would substantially increase.
Thank you so much. With 800 million unique mobile users, that is a huge number. We now have about 3 minutes for questions. So if you could, if anyone has questions, pointed, sharp questions. Yes, sir, if you could just go to the mic. Next.
Hello, yeah, okay. So while we talk about issuance of monies digitally across the government sector, what about acceptance, such as even GST payments? And there are also payments such as business to government payments, business to business payments. I think pretty much we have covered off with the issuance on wallets and so on, a large number of customers or consumers. The businesses also need to start digitizing, and the acceptance points need to be built there, which I believe will solve for the problem. Your views, please.
I entirely agree that what we are doing is we are ensuring, number one is that within the government system, we ensure that both on the payments and the receipt side, it's universal. And I suppose that's when we can take a higher moral ground with the business and the corporates, that if the government has been able to do it, and governments normally are more lethargic, are less technology savvy, there should be no reason for corporates not to be able to do that.
Hello. Yeah, my name is Anand. I'm with Catalyst. My question is around the demand side. So a lot of initiatives that are going on are continue to be very supply side, so from the government or from any other institutional perspective. What thinking is happening within the government on driving demand side initiatives? Is there any thinking about how to incentivize the use of non-cash as opposed to punish the use of cash?
Yeah, I mean, the cabinet which approved the digital transactions program in February this year, one of the issues that was highlighted was on what are the ways of either incentivizing non-cash or disincentivizing cash, non-cash and disincentivizing cash. No final decision has been taken on what are the methods, though internationally, if you look at, people have done cashbacks, people have done lotteries, people have done tax exemptions, and a host of other measures. Those measures are being considered. The only thing is, tax exemptions are not a preferred method by which the government would like to incentivize, because it distorts the entire system. But as of now, there is a group looking at, there's a committee which is looking at what can be done in the medium term. And we hope to come out with some such, suggestions are welcome on both for incentivizing non-cash or for disincentivizing cash.
I'll take the prerogative of asking the final question to Mr. Kumar. To what degree, since this is an international conference, we have delegations from Vietnam, Bangladesh, the Netherlands, many countries. To what degree is India's DBT template exportable and adaptable by other developing economies? Has there been much interest?
That's an interesting point. Actually, DBT, of course, has started in many other places, and there are many examples around the sector, and I think internationally also it has evoked a lot of response. But essentially, India, in many sense, the DBT that we are looking in India is it's based on our own requirement, given our size and given our set of issues. We have tailor-made approach in DBT, and it essentially starts from Aadhaar. The Aadhaar, which is a digital identity framework, which has been very, very successful. We have crossed a billion mark. 1.05 billion is where we stand today, and almost nearing completion except for Assam, Meghalaya and Northeast and some other pockets. So that provides a very strong foundation for the DBT to happen in India, because that's a digital identity which is, the brilliance lies in its simplicity. You have identity captured digitally, which can be authenticated through through the technology that is available today. With all the secured, identities at one depository, once that identity is established, then the problems of inclusion, exclusion, and host of other problems which were inflicting the benefit design in government, if I were to say, get addressed by those. So essentially, that is the central framework, and then of course the mobile revolution has been very successful in the country. 800 million unique accounts, more than a billion connections, with the improvement, in technology to improve the quality of connectivity. These two basically answers the DBT approach or edifice in India. Now, for other countries, while DBT in terms of, let's say, conditional cash transfers or unconditional or different other ecosystems of smart card payments, or those experiments have been carried out and are being tried out, but ultimately for any country to take up a comprehensive way, of course, we, given our size and given our dimension, it was much more challenging, but any country which wants to take it up should start with a digital platform, look at these digital identities, universalize some of these data sets, and then look at different applications which can be run on this. So because we have all those ready in time, so we're in a stage which is very fast to take off, but I'm sure that other countries can also follow the suit in that sense.
Thank you so much. Our next, we move immediately to our next panel discussion, which is an interesting one on states and digital federalism and how state governments are doing in terms of adapting a digital financial ecosystem. I'd now like to invite Pooja Mehra, who's Senior Deputy Editor, The Hindu, who's be moderating the session. Speaking in the session would be Dr. Abhirup Sarkar, Professor, ISI, and Vice Chair, West Bengal Industrial Development Corporation. Mr. Arvind Kumar Chowdhury, Secretary, Social Welfare, Government of Bihar. Mr. Anil Kumar Yadav, Additional Secretary, Finance, Government of Gujarat. Mr. Sunil Saran, Secretary, Department of Finance, Haryana. And Mr. Om Prakash Berwa, Director, Economics and Statistics, Government of Rajasthan. If you could all please come up here, please.
Good afternoon. I'd like to introduce the panel first to begin with. To my extreme right is Mr. Sunil Saran. He's the Secretary, Finance Department of Haryana. After him, to his left is Mr. Anil Kumar Yadav. He's the Additional Secretary in the Finance Department in Gujarat. To my left is Professor Abhirup Sarkar. He's a professor in the Indian Statistical Institute, and he is the Vice Chair of the West Bengal Industrial Development Corporation. And to his left is Mr. Anil Kumar Singh. He is from the RISL, which is the Rajcom Info Services Limited. It's an undertaking in the government of Rajasthan. To introduce the subject we are discussing today, state governments possess the resources and penetrative institutions to digitalize financial transactions. Using open API ecosystem, India Stack is an example. This session will showcase how innovative technological architecture have enabled governments at national and state levels to develop services that reduce cost, increase transparency, and better serve citizens. In particular, this panel will focus on the direct benefit transfers as a person-to-government payments platform. The format will be, we will first request our panelists to share with us experiences of their states with digitalization, the institutions they are setting up, how they are rolling out DBT, what are the challenges they are facing, and the success stories. Following that, we will discuss in the panel the issues that emerge from this discussion. There will be closing remarks after that, and if we have time, we'll open the session for questions from the audience. So requesting Mr. Arun for his remarks. As you like.
Thank you, ma'am. Namaskar to all. I am Sunil Saran, Secretary of Finance. Sir, my presentation will be in the three parts. First is the steps taken by the state government in the field of the e-governance. And second is the treasury management, whatever steps we have taken for the treasury management. And third is the direct benefit transfers. Sir, government of Haryana is following the maxim, that is the minimum government and the maximum governance. The state government is giving the unparalleled emphasis to the good governance with the special focus on the process reforms, IT-enabled governance, government processes. The whole idea is to remove the irritants and the human intervention, to minimize the human intervention so that the corruption will be reduced and using the information technology at the large. One of the major initiatives is taken by the government of Haryana is the CM window, under which the public register their grievances and the CM is monitoring online on the regular basis. And one of the advantages is that the CM will get the feedback from the public, and the officers will directly get the feedback from the public, whatever the grievances we have addressed. I am also happy to inform that the Haryana is the first state to develop and implement the integrated birth registration system, which enables the Aadhaar enrollment of the newly born child along with the birth registrations. Under the Digital Haryana initiatives, the 22 services of the Health and Revenue Departments were launched on the 2nd May 2015, which were successfully delivered across the state through the common service centers, e-Disha Kendras, and all the PRI's institutions. And in the second phase, around the 200 services of the department, 20 key departments having directly impacted the life of the citizens have been launched. And we have established around the 3,000 common service centers in the Haryana. And one of the major silent innovation which the state government has taken is the form of the biometric attendance system. Without the coercive measures, we have improved the punctuality and the attendance of the government employees. That will improve the productivity and the efficiency of the administration, which will directly benefit the consumer of the citizens of the state. So the second part of my initiatives taken in the treasury management and the financial flow of the flow of funds from the state to the beneficiaries. The state government has introduced the system of the government receipt accounting system, eGRAS, which is implemented since 2014, under which all the receipts and the payments are made through the system. This portal has been integrated with the major receipt transactions in departments such as the Excise and Taxation, Haryana Staff Selection Commission, being further extended to public health services. One of the major initiatives taken by the state government is the introduction of the e-stamping system in the Haryana. And we have made mandatory e-stamping in the 4 districts, which has been extended to the 6 districts. Under this, the corruption has been reduced, and all the citizens can generate their e-stamp from their own house using our portal system. Under this e-stamping system, we have issued e-stamps amounting to the 58 lakhs so far. So recently, the government of India has developed a package system, public financial management system, to monitor the flow of funds from the New Delhi to Chandigarh to the beneficiary's account. That is under process. The purpose of this system is to track the track the monitoring and fund disbursement and utilization of the state funds as well as the Government of India funds under all the plan schemes on the real-time basis. So the state government is using this portal with the credentials provided by this portal by monitoring day-to-day releases and the sanction issued by the ministries concerned. That the objective is to track the flow of funds from the government to the beneficiary's account. That is also part of the direct beneficiaries. And other major initiatives taken by the online management of the projects involving having the cost of 10 crores and above. And in the future, we are going to automation the fair price shops and the e-procurement system of during the Kharif season on the ensuing Kharif season. Sir. Under the DBT system, Haryana is one of the top ranking states in the country with the Aadhaar enrollment of more than 100% in the 18 category states. Under the Aadhaar-enabled payment of the DBT systems, we have saved so far 350 crores and weed out the 28 lakhs dummy beneficiary or ineligible beneficiaries. Sir. So our efforts, I can give the breakup under all these schemes like the PDC, under the pre-matric and post-matric scholarship and the pension disbursement funds and the kerosene disbursement. As the Honorable FM has informed that the Haryana government is one of the first state to be the kerosene free by the end of the March 2017. And by the end of the October, 8 districts will be declared kerosene free in the state. Sir. In the state government has identified 73 schemes with an outlay of the 6,000 crores, under which the benefits will be transferred directly to the beneficiary accounts. As per the mandate of the of the Government of India, we have constituted a DBT advisory board under the chairmanship of the Chief Secretary, in which all the administrative secretaries of the department concerned are the members, and we have also established the DBT cell with the additional Chief Secretary Finance as the coordinator. Our CM has mandated ordered that the 3 major activities should be registered, 100% registration should be there. These activities are the birth, marriage and death. That is our mandate, sir. We are doing this. Under the Pradhan Mantri Jan Dhan Yojana, we are the 4th state to achieve the milestones by covering all the 48.58 lakhs households. As on date, we have opened the 52.54 lakhs accounts, bank accounts, of which the 27.85 lakhs in the rural areas and 25.69 lakh in the urban areas. Out of these, the 38.84 lakhs have been Aadhaar seeded. So that is our performance. And our performance has been appreciated at the Government of India level also, and we have received 3-4 major awards in the field of the e-governance from this. That is the status report we have.
Thank you, Mrs. Arun. So we'll invite now next Mr. Yadav. Haryana, a state like yours, with traditionally a very cash dependent state, has saved 350 crore rupees, he told us, from the shift to the DBT. We are eager to hear the success stories from your state, Gujarat.
Good afternoon, ladies and gentlemen. First of all, I would like to congratulate Observer Research Foundation and Better Than Cash Alliance for organizing this wonderful program regarding digital payments as well as the way ahead in this particular area in the country. Gujarat government primarily has been steering ahead with regard to digital atmosphere and ecosystem in the country. And it is one of the foremost states which has launched many initiatives with regard to online payment systems. We also have different initiatives which are being taken by various state government departments to facilitate the use of technology to deliver maximum service with minimum usage of time and money. Here today, due to the paucity of time, I would just highlight some of the initiatives which the state government is taking in the state for digital footprint, to increase the digital footprint in the rural areas as well as the urban areas. In Gujarat, there is a system, there is a, you can say, a society which is there, or a program which is there, which is called E-Gram and Vishwagram program. Now, the the most important aspect of this particular initiative is that around 14,000 villages in Gujarat are connected with internet connectivity. Now this e-gram module is like that. There is a simple computer is there. One kiosk will be operated by a voluntary person. He will not be appointed by the government. They are called as VCE, or village level computer entrepreneurs. So these particular entrepreneurs, they are basically operating the kiosk and providing all the you can say services which are being offered by the government. For instance, if a student wants to fill up an application form, he can go to this particular e-gram and simply log into the system, put in all the details, and he will be able to in fact fill up the form. This also, it is basically a single window system whereby a common public or a common citizen in a rural area can have all the services at his disposal. So this e-gram and Vishogram project is basically very, very successful in Gujarat, and because of this, most of the people in the state, they are having access to the services which are being provided, which are being offered by the state government. Now this e-gram project is basically launched in different phases, but right now we are in a very advanced stage, and even at the taluka level as well as the district level, these services are being offered to the common citizens. Even the land, you can say land documents, land registration documents, generation of certificates, caste certificates, downloading of forms for different jobs and all, they can also be accessed from this particular e-gram. Second initiative which is there in the state is we have a very robust investor facilitation portal, which we call it as IFP, and all of us know about the Vibrant Gujarat Global Summit, which is going to be held again next year in January from 10th till 13th. It is a major, in fact, initiative by the government of Gujarat, and which has been replicated by other state governments as well nowadays. Now, in the investor facilitation portal, it is again a single window concept whereby the investors who are willing to invest in Gujarat, they can just go to the portal, log in there, they have to create a user ID, log in there and get all the details of the opportunities which are available in Gujarat. So IFP has been very, very successful, and this year we are also in fact upgrading the system so that out of the feedback which we had received out of the previous global summits or the Gujarat summits, this investor facilitation portal is being upgraded, but nonetheless it is a single window, one-point solution to all the investors who want to come to the state and invest in different areas which are having potentials. Third initiative which we have taken is regarding the computerization of our treasury. We have developed a cyber pension and treasury portal. Now there are two parts in this particular portal. One looks after the pension aspect of the common the citizens or the people who have retired. Another one is dedicated to the treasury. Now this particular portal which is there, it will in fact benefit most of the pensioners who are getting pension from the state government. They simply have to go to the portal with all the details which are given in their pension orders, and with that they can know their status, the date of payment, and all other reports or any previous details regarding their pension payment can be in fact known from this particular portal. We also have the treasury portal which is in fact with the state government, and most of the commercial taxes like VAT, etc., they are also being in fact given access to this particular portal, and this in fact has facilitated the business community in the state government or the state at large. Even e-receipts of taxes is being done through this cyber treasury portal. We also have e-payment modules which are in fact uploaded on this particular portal. In Gujarat, we also have one more system which we have developed, which is called OJAS, that is Online Job Application System. Now, this particular portal or the system which has been developed primarily looks after the job applicants, prospective job applicants. They have to just go to the portal. Everything is given on the portal. What are the job vacancies which are there, how they can fill up the form on the portal itself. So OJAS is basically helping the young population at large who are just coming out of the colleges and who are looking for job in the government sector. So basically this is a facilitator, it is acting as a facilitator between the government and the prospective applicants who are seeking jobs in various departments in the government. My previous colleague from Haryana spoke about DBT. In fact, Gujarat government is going in a great way with regard to the direct benefit transfer. I think we were one of the first states which we set up the DBT cell. DBT cell is basically a system or the infrastructure which is there in the state government, which is generally headed by a very senior officer. So DBT cell will again have members from all the relevant departments who are implementing the direct benefit transfer. Now, we have identified around 150 Government of Gujarat as well as Government of India schemes. Now, out of these 147 to be precise, 19 schemes of Government of India are being regularly monitored at the level of the Chief Secretary as well as in the Cabinet with regard to the direct benefit transfer. But initially which we are focusing is because of the deadline which has been given by the Government of India to move to DBT by March 31st, 2017, all the central government schemes initially we are going to focus. In this, the pension schemes are there. We have this Indira Gandhi National Old Age Pension Scheme, Indira Gandhi National Widow Pension Scheme, and Indira Gandhi National Disability Pension Scheme. So, through the National Social Assistance Portal, which is called as the NSAP, through this portal, daily monitoring is being done at the secretary expenditure level in the government, how the DBT is progressing in particular our state. But one basic problem which we are having is regarding the Aadhaar seeding of the bank accounts of some of the beneficiaries, but we have already set deadlines or the timelines for the departments to achieve this Aadhaar seeding of the bank accounts maybe at the earliest by end of this particular month, that is October 31st. Other than the pension schemes, we are also having focus on the scholarship schemes, which are also Government of India schemes. Now, we are trying to develop a mechanism or an integration of the Government of Gujarat as well as Government of India schemes, how this particular Government of Gujarat schemes, which are around more than 130, which can be integrated with particular Government of India portal. So, this is in fact in a very initial stage. So, once we are through with the Government of India schemes, finally we are going to integrate all the DBT for the state government schemes with the Government of India portal. I think that will be a big, in fact, facilitator as well as game changer with regard to the savings, because as we know, through DBT, we can save crores of rupees, duplication of beneficiaries are eliminated. We also have savings of time is also saved, as well as the manpower which is deployed in disbursement through cash, that can also be reduced to a great extent. Another related to the DBT is regarding the integration of the public fund management system of Government of India with the state treasuries. Of course, some state governments had some apprehensions regarding the integration part of it, but Government of Gujarat is going ahead with the integration of PFMS with the state government treasury. Now again, this will facilitate faster movement of funds from the Government of India to the state government beneficiaries who are having benefits from the different Government of India as well as state government schemes. One new initiative which we have taken is Government of Gujarat has a number of state government social benefit schemes also.
Mr. Yadav, I'm so sorry to interrupt you.
Okay, I'll just
we're just running out of time. So.
Okay, I'll just speak one thing, one more aspect. We are developing an online portal where all these Government of Gujarat schemes will be linked with the banks, because what is happening at present is that there are a lot of anomaly or discrepancy in the data which is there with the banks with regard to these sanction of applications, state government applications, and the pendency at the department level. So I think this particular portal which we have already created a committee to develop this portal, whereby all these state government schemes will be linked to the bank, will give some access or gateway to the bank, so that they can also reconcile the number of applications with the governments are sponsoring as well as the banks are receiving. And finally, there is of course, Gujarat is famous for online grievance redressal mechanism. There is a system called Swagat. Through Swagat, the Honorable Chief Minister, in fact, selects a few particular citizens who have sent their complaints to the government departments, and we have a live interaction with the complainant and the Honorable Chief Minister along with the relevant departmental heads, so that the resolution of the complaint can be done online and on the spot. Thank you very much for listening to me.
Thank you, Mr. Yadav. I'll now invite comments from Professor Sarkar. In particular, I would like you to focus on one particular success story of digitalization, maybe the scholarship scheme for young girls, and also because you've done a lot of economic research also on the subject. So if you could just take us through the outcomes that you have seen as a result of digitalization? If performance of students has improved, if dropout rates have gone down, if attendance has improved, things like that, measurable outcomes.
Yeah, thank you very much. I shall be brief because we are running out of time. However, before I actually give you an account of what has been achieved in West Bengal, I think I should tell you the background. After the new government came to power, it's not really new now, it has been elected for the second time, there has been a change in the stance of administration. Previously, the left front government had ruled West Bengal for about 34 years. The previous stance was to depend more on locally elected bodies for economic development. That is, you had your elected Gram Panchayat Pradhans and so on, and they decided what should be done and how money is to be spent. Now, after the new government came to power, the emphasis has been shifted more or less to bureaucrats, right from the BDOs to SDOs to the DMs and so on. But the matter does not stop there. Our Honorable Chief Minister, every month, she visits 1 or 2 districts herself, and the administrative meetings are held in the district. Now, this is the background, basically, and how this kind of monitoring of development projects are being facilitated by digitalization. That is the question. Now, you see, when the Chief Minister is holding, I have been to one or two of these meetings. When she is holding these meetings, typically the district magistrate is called. He has all the data, digitized data about all the projects in that district. There are all sorts of stakeholders, beneficiaries, officials, elected members and so on, and people can ask questions. And in front of the Chief Minister, the officials are supposed to answer. But then digitization helps because all the data is there in the computer. So this is one important way. Now, if I have to talk about successes, one success is the Shri program, basically giving scholarships to young ladies who are going to school from class 8 to class 12. So far there have been 25 lakh beneficiaries, and there have been studies which show that this has a significant impact on child marriage of girls. So the average age has improved, has increased, and dropout rates among girls have fallen. Apart from this, there have been fair price shops in medicines, fair price shops in hospitals. Poor people, in fact anyone, not even, you don't have to be poor, anyone who drops in can get the medicines at half the prices. The doctors at the hospitals, government hospitals, they have to write prescriptions using generic names of medicines, not brand names. And these generic items are available in the fair price shops. And the whole thing is monitored digitally. And last but not the least, the finance department has been totally digitalized. Now you can pay your taxes, digitally, and that has led to a very, very significant increase in tax revenue. This is a one-shot gain, of course. You do not digitize every day, of course. Every year you don't do that. But the first time you digitize, you will find, we have found that there has been a significant increase in the tax revenue of the government. So that is another achievement. And finally, all transactions more than 5 lakhs have to be e-tendered. There are e-auctions as well. So that has led to a drop in the rate of corruption. So these are roughly the achievements of the government of West Bengal. And opportunities, I'll just take 2 minutes about the opportunities. The State Finance Commission has recently submitted its report. I was the chairman of that commission. Now we have suggested that, we all know that the 14th Finance Commission has allotted a lot of fund to the local bodies, to the rural bodies. Now we have suggested that if this money goes directly from the center to the panchayats, that would save a lot of leakages. Earlier on, this money, even now, this money is going through the different tiers. There are 3 tiers, right? In some states there are 2 tiers, but in most states there are 3 tiers. So typically the money comes to the Zilla Parishad, and from there it's distributed to the panchayats. But using digital technology, this money can be directly transferred to the Gram Panchayats, and that would save the time and the leakage, and I think that would improve the use of money. Thank you very much.
So the West Bengal experience, where easier compliance has led to an increase in tax revenue. From Rajasthan, we want to learn about how the fair price shops are being moved onto a digital platform, and between January and September itself, there has been huge successes. So
good afternoon. I would be talking about the Bhamasha scheme, the flagship project of Government of Rajasthan, through which we have implemented the direct benefit transfer both in case of cash as well as in non-cash. And it is also implemented the financial inclusion in the state, along with emphasizing women empowerment, the state resident data hub, and the family identification. As far as financial inclusion is concerned, the state has gone ahead with the same focus as Jan-Dhan Yojana. We have aimed at opening up at least 1 bank account per family. Of course, motivating all other family members to open the bank account, and at the same time opening up payment services near their doorsteps. Just opening bank account does not serve the purpose. So we have also emphasized that banking service should be available near the doorstep of the beneficiary. As far as women empowerment was concerned, we have declared women as the head of the family under the scheme, and the cards have been issued with female head of the family photograph printed on the front and rest of the family members on the back side. And we are also transferring rupees 2,000 into the bank account of the woman head of the family for BPL families, just to motivate and encourage them to open the bank accounts. In the process, we have created the state resident data hub by actually going into field enrollment. We have held both offline camps, and we have opened up permanent enrollment centers in the form of e-mitras. As far as direct benefit transfer is concerned, we, as already told, it caters to both cash as well as non-cash benefits being transferred to the beneficiary. The cash benefit is directly into the bank account, and non-cash is through biometric authentication into the hands of the correct beneficiary. In both the cases, we have implemented the Aadhaar framework using APBS and AEPS mechanism, and as well as authentication mechanism of Aadhaar. The benefit that majorly occurred is that initially for cash benefit transfer, government was paying 25 rupees per money order per beneficiary for transferring the benefits to his home address. Now that has been done away with. We have got a clear saving of 25 rupees per beneficiary per month with regard to benefit transfer in case of cash. And we have had more than 6.50 crore transaction as far as this non-cash benefit transfer is concerned. We have got total 26,000 FPS shop, out of which almost 25,000 has POS machine, where ration is being issued through biometric authentication of individual beneficiary. He has the option of coming out with either a Bhamasha number or an Aadhaar number or a ration card number, and he can avail that facility after biometric authentication.
Mr. Singh, could you please explain us this particular example a little more? It's very interesting how lives of people might be changing because of digitalization at the fair price shop.
Yeah, fair price shop, initially there was, as per the press cutting that I have, but I'm not able to show it to you, we have had more than 40% saving as far as kerosene is concerned, and more than 25% saving as far as wheat distribution is concerned, just by computerizing this fair price shops in our state. There was initial problem with regard to connectivity in the remote locations, for which we have gone ahead by implementing Rajnet project, by providing VSET connectivity at all the remote locations in the state. At the same time, we have also implemented a citizen call center and a Rajasthan Sampark portal, which is a grievance filing and grievance redressal portal. For any of the kind of grievance that individual is facing, they can file their complaint at these, either at the call center or on the portal. So both facilities have been provided. At the same time, we have also implemented video conferencing facility down to the level of panchayat samitis for training the stakeholders with regard to the operations of the machine, and with regard to, and also for monitoring the progress of the project.
Mr. Singh, I'm sorry to cut you short, but we have only 6 minutes left, so we'll probably keep the rest for the questions. Okay. But I was very keen to hear from Professor Sarkar, what further innovation is West Bengal trying with expanding the digitalization? Not what has already been done, but what more can be done?
Yeah, one challenge that that not only we in West Bengal face, but I think that challenge would be there all over the country, is the challenge of financial literacy. You see, there are mindsets among people to use cash, not to use digital, not to go for digital transactions and so on. So it is very, very important to change the mindset of the people. This is one challenge. I think the government can take positive measures in terms of, telling people how digitalization can change their life. So that is one thing that can be done. The other thing is that in some parts of West Bengal, also Odisha and Assam, and also the south, you see, there is a problem of phony, investors basically infiltrating into the villages. They would promise very high rates of interest, and people would go for them, right?
West Bengal's had that problem.
West Bengal definitely has that problem. South has the problem of, microfinance charging exorbitantly high interest rates. So it's basically, in some form or other, there are, dishonest people who are trying to make use of the financial illiteracy of the, basically the rural people. So I think either way, one should try to remove financial illiteracy before we can go for further digitalization.
That's a challenge that you're facing in Gujarat as well, because traditionally Gujarat is a very cash dependent society, and to bring people onto the digital platform, what is your state doing?
Yeah, right. Actually, in Gujarat, as you know, traditionally cash is very much in use, and to make people adopt this new technology, what we are doing is creating awareness about it. And as our colleague from Bengal has mentioned, that people have to develop trust in these particular systems which are being put up amongst the public. Another major challenge which we are facing with regard to use of cash is that, you see, technology, if you are taking it to the rural areas or the hinterlands, the language also becomes a barrier at times, because most of the new technology which is coming up is primarily in English, and these states like Gujarat and Hindi belt, they are having a lot of problem with regard to the language barrier as well. So I think the innovators who are there, if they can develop these technologies in the local flavor or the local language, most of the challenges could be reduced to a great extent, and people will be coming in a much more enthusiastic manner to accept this particular technology with regard to digital payments. And for reducing cash, Government of Gujarat has taken a lot of initiatives in consultation and in association with the bankers. We are trying to have many more micro ATMs, as well as through the banking correspondents and the bank mitras. So I think once these particular ecosystem develops in the rural areas and the hinterlands of the state, people will come forward to use more of technology rather than using cash.
Mr. Singh, I wanted to ask you, how much of all of this has to do with training of the state representative on the field, be it a business correspondent, or be it a panchayat worker, or be it the technology operator? Is this a question? Is it an institutional challenge? Is it a question of training? What's the experience in Rajasthan?
Actually, the training, when it is imparted through a single source and through a single person who is actually involved in development of a software, if he is imparting it through video conferencing, you are able to address all the stakeholders simultaneously and with similar understanding of the application or of the technology.
You said you're operating a call center. The state is operating a call center.
Yes.
So do you use that to capture information that is required to be fed into the system so that the loop is complete?
Any grievance that is being filed, either it can be done on Rajasthan Sampark portal, or a call can be made to the call center, and again the call center operator.
Is any data analytics used to capture the information that is coming from this?
Yes, it is a SAS analytics we are using at the back end.
Right.
And the whatever calls are coming to the call center are being fed on this Rajasthan Sampark portal, so that entire data is digitized with regard to the grievance being filed.
Right. With that, I think we have come to the end of... yes.
State of Haryana wants to share the... Hello? Hello?
You can
State
speak into it. You can speak into it. Hold it closer.
Well, may I request the ORF and the other agencies, other international agencies, to document the best practices, both national and the international, in the field of direct benefit transfer, so that we can improve our performance in a more better way and aligned with the national and international way.
So with that,
we also share with her.
With that, time's up. I'm sorry, we don't have time for questions from the audience. So we say thank you to our panelists.
We're now ready for our second keynote speaker. Mr. Amitabh Kant, who's already arrived and is about to walk in, is one of India's most experienced and well-regarded economic administrators and public servants. He is a key figure for in this government's economic transformation program. He is currently CEO, Chief Executive of Niti Aayog, the National Institution for Transformation of India. Niti Aayog is working on a number of initiatives which are transforming the interface between the state and the citizen, between the central government and state governments, between state governments themselves. And in all of these, digital payments and the digital payments ecosystem plays an integral part. It's key to the architecture. So I'd now like to invite Mr. Kant to come straight away and address us.
Ashok, distinguished guests, ladies and gentlemen, great pleasure to be here. You know, India is growing at about 7.5%, but the challenge is to make it grow at higher rates of 9 to 10% per annum, year after year for several decades, and to lift a very young population above the poverty line. And there are a couple of things I think India needs to do for that. One is that it needs to make itself a very easy and a very simple country to work in. India had made itself a very, very complex, very complicated, very, very difficult country to work in for business to grow and flourish. And therefore, you need to dismantle a lot of rules, regulation, procedures, and acts. And that process of dismantling is presently on in Government of India. So several things we've done, import, exports, we've brought down the number of forms to be filled up from 11 and 9 to 3. You can register a company in 1 day. MSMEs can register in 2 minutes now. So a lot of radical changes have been done. We've tried to bring in a huge amount of competition among states as well through this ranking and trying to name and shame the states. So we rank the states now on how well they are performing on ease of doing business. And the basic thrust is that make India efficient, make it easy and simple. The second key point to my mind is that India must become a very integral part of the global supply chain. And if India is to become a very integral part of the global supply chain, then you needed to open up your economy in big ways. And we've opened up every single sector of India's economy. So we've opened up, FDI regime in defense, construction, railways, insurance, pension funds. And actually, the total FDI into India has grown by about 53% as compared to a global decline of about 16%. We are today the #1 recipient of FDI across the world. Third key thing to my mind is that we need to tap the energy, vibrancy, and dynamism of our young people. And a lot of that movement we are seeing in startups across India, not merely in the digital world, but also in health, education, social innovation, all these. And fourthly, we must understand that actually India has today become the center for global innovation. And Bangalore and Hyderabad have in the last 4 to 5 years had close to about 1,500 multinational corporations who've relocated their global innovation centers into Bangalore and Hyderabad, and this seems to be now spreading to Pune as well. So these are key things, but the most important of all this is that how does India use technology to leapfrog? And it'll be very difficult for India, as I said, to grow at 9 to 10% and lift vast segments of our population above the poverty line without using technology to leapfrog. And it's only technology which will enable total factor productivity to come into India. Because at the peak of its growth, when Japan was growing post-World War II, its productivity levels were rising by about 31%. But when Korea was growing much later, its productivity levels were rising by about 41, 42%. But when China grew, its productivity levels rose by almost 73%. So you see the difference in levels of productivity during those particular spurts of growth. But if India is to grow and really expand rapidly, because it's important to understand the difference that if India is to grow at our per capita income is roughly about $1,580 US. But if India is to grow at 7%, just grow at 7% per annum, and if that is India's ambition, By 2032, we'll take our per capita income to roughly about $4,400 US. But if you grow at 10%, the compounding power of growth is so enormous that you'll take your per capita income to close to about $6,800 US. So that is the compounding power of growth. So 10%, you double your income in 7 years, and that's why it's important for us to understand this. But for that to happen, technology will be the differentiator. And if technology has to be the differentiator, then India must aim to become a totally cashless, presence-less, paperless society. Until it doesn't happen, it will be very difficult to reduce the costs of transaction and lift people above the poverty line. Because if you follow a traditional process of growth of creating brick and mortar banks in rural areas, spread credit to all of them, get people to be posted in banks, that's a very, very tardy process. And the cost of transaction will be enormously high, whereas digital transactions today enable you to radically reduce your cost of transaction. But it's also important to understand that while we are talking about this today, that non-cash transactions today are just only 22% of all consumer payments. Just 22% of all consumer payments. But nevertheless, the speed at which it is growing, it is expected to overtake cash transaction by 2023. The key challenge, of course, is that all this will happen, and that I'll come to those points, that what is it that will be the key driver of growth. Now, the current value of digital payments is just about 50 billion, but it is expected that the total payments via digital instruments by 2020 will cross about 500 billion. Now, the current number of point-of-sale terminals in India is only 1.2 million, just 1.2 million. But we've taken several measures and very radical measures to push the limits of digital payments, to provide impetus to digital payments. The country is, over the last several years, if you look at the last 45 years history, we've had just about 12 bank licenses issued, but in the last 1 year, we've issued about 23 bank licenses. We've issued licenses to 11 entities for payment banks. I think the biggest radical departure has been the Universal Payments Interface. It's a very, one of the officers that made me try this, it's an extremely seamless, interoperable, and universal payments interface which has been launched. And I think this will be a very, very key driver. It's radical in its approach. We've had a KYC relaxation on transactions up to 10,000 per month on prepaid instruments. We've had exemption from two-factor authentication in case of wallet transactions. The Aadhaar linking has made KYC much more easier and faster. And today, the Bharat Bill payment system allows multiple payment modes at merchants' POS. But there are also several barriers for consumers to become digital citizens, and I think Indians, because we are, we are a very young society, and 72% of Indians are less than the age of 32, and because, to my mind, the biggest transition taking place across the world is in terms of social demographics, that Indians are getting younger and younger and will keep getting younger till 2040, whereas the Western world will keep getting older and older. And this is the biggest social economic transition that is taking place. It's the biggest social and economic phenomenon that's taking place across the world. And since young people are able to adapt to the digital world in a much quicker, much faster manner, it's important to break the barriers for consumers to adopt to the digital world. And I think we need to push the limits on this habit of using cash. This habit of using cash must move away. The complexity of digital payment instruments, payment gateway pages not available in regional languages, and the spread of regional languages is very, very important. And it's good to see many, many young startups doing some remarkable work in this field. I don't know how many of you have heard of this Reverie Technologies, which is able to translate, transliterate, and actually provide search engines all in 14 different Indian languages. So those are major things, payment gateway pages being made available in regional languages. You know, the complexities of about remembering login, passwords, etc. But the biggest challenge is about the limited reach. There are challenges about hidden charges, fraud risks, trust issues. All this we need to tackle. But I think the biggest game changer in all this essentially has to be a very, very rapid spread of internet. You know, nothing is going to transform India other than the spread of internet in a very rapid and fast manner. And this, you know, if you look at China, in the last 5 years, their e-commerce has grown by about 600%, 600%. Alibaba started in 1999, but today it's a company with, its valuation is 200 billion, 200 billion is its valuation in a very short period. I mean, it's done some very unique things. So there's Alipay payment mechanism, etc., where they hold the money in an escrow account till the goods are not delivered is a remarkable innovation. And therefore, as we go along, a lot of innovation is required. But I think the biggest game changer has to be the spread of internet in a very rapid, quick, fast manner. And towards that, I think the key will be the right of, we've had one disruption through this coming in of Reliance Jio right now, but I think the big disruption will have to happen through the right-of-way policy, which should get announced quite shortly. And this right-of-way policy is important because many states, many municipalities at the field level are posing immense problem on laying fiber. Unless and until we allow private sector to lay fiber and spread fiber in a very big way, it'll be very difficult to make this distinction. In the long run, good connectivity, very robust connectivity will come in from the spread of very good fiber under the ground, and therefore right-of-way policy, to my mind, is a very, very key challenge. But the BharatNet, which was held up for some time, since I'm a member of the Telecom Commission, I can tell you a lot of headway has been made. It's not that we've got pipes, we've got fiber below, but the supplier of Geopon on either side, the instrument on either side, which has to make it live, one supplier would bid on L1 several years back, had miserably failed to supply at those prices. And that's how India is. India has become obsessed quite often, even in technological fields, on the lowest cost. And that's why this L1 supplier 4 years back has miserably failed to supply. And therefore, I think it's also a case for arguing that India should not work on the lowest cost in this country. We should disrupt this model of lowest cost also. We should devise a system of quality come cost, which we do in several areas. So now that has all been sorted out. We've now got 4 suppliers, so things will move very rapidly. But I think the other thing which Government of India is planning is to spread it much more rapidly by adopting what has been done in Andhra Pradesh, using power lines to spread connectivity. And in second phase, several areas will be spread through that. So, you know, the important thing is that there are several game changers. And the game changer really are many, one of which is the rapid spread of Digital India program. It's also the rapid spread of Universal Payments Interface of NCPI. I was told that Ajesh had earlier spoken about allowing the market to compete. I'm all for it, but I think UPI is still in its very initial stages. I think we should allow that to settle down for some time, let all the banks get interconnected. And in the subsequent phases, yes, of course, there needs to be, I'm a great believer in market, and therefore you should have competition in the second phase. I think the third big game changer is, of course, the JAM Trinity, which is important, and therefore Digital India program, UPI, JAM Trinity. And I think fourthly, the expansion in physical points of sale. That is, you know, we have only 1.2 point of sale terminals in India, and we need to take it to about 20 million in the next 2 years, from 1.2 to 20 million, and actually every Kirana store needs to have point of sale terminals. Without this, this will not happen. And I've already talked about internet and smartphone penetration. We are a country with 1 billion mobile, We're the only country with 1 billion biometrics. No country in the world has that. And I'm extremely confident that by 2024, we'll be a country with 1 billion smartphones. So all the innovation, all the payments, everything will actually happen through smartphones. And that's why when I say that our e-commerce, India's e-commerce is just about 20 billion right now. But by 2025, I expect it to be about a $250 to $280 billion business. Actually, my view is that brick and mortars will find it very difficult to compete against e-commerce as we spread internet very rapidly and as the mobile telephony and smartphone spreads very rapidly. So internet and smartphone penetration. And lastly, the huge focus which government is laying on DBT, that is using across all government schemes, from scholarships to foods to LPG. We're just doing this experiment on DBT on supply of fertilizer in 16 districts of India. We're doing another one on, we're actually doing it right now live in Krishna and Godavari districts of Andhra Pradesh, but we want to spread it to other districts. So as the Digital India program spreads, as universal payment spreads, as JAM Trinity expands, as there's expansion in physical points of sale, which we need to take from 1.2 million to 20 million, as internet and smartphone penetration spreads, and as DBT spreads across, you will see growth, you will see opportunities, and you'll see a huge inclusion. The only way for India to have accelerated growth is through digital payments. The only way you can have inclusive growth is through accelerated growth with inclusive growth, is to have digital payments. And India's target should be really that it needs to become the first country, disrupt a lot of technologies to become a cashless, presence-less, and a paperless society. Our target should be that by 2025, every single transaction must be a digital transaction. Thank you very much, ladies and gentlemen.
Thank you very much, Mr. Khan, for a very optimistic and very inspirational speech. By 2025, we move into a completely digital ecosystem that would be revolutionary. We now have time for about 3 or 4 questions. So if you could, yes.
Hello. Sir, if we need to move from 1.2 million POS to about 20 million POS in the next couple of years, can we think of white labeling so that the merchant can then start to buy these POS and fit them into their systems such that acceptance becomes seamless? Just a thought. Your view, please.
Actually, we'll be open to anything which is radical, which is revolutionary, and which will push the limits. My belief is that you need to spread the point of sale transaction at the Kirana store level. That's the big thing. And to take it from 1.2 to 20 million, anything that we can do, if you can give me a one-pager, not just one measure, but 2 or 3 measures, whatever is required, we'll be very happy to drive it as a policy measure from NITI.
Thank you so much, sir. Will do.
But that is, to my mind, a very key thing. That will be the key thing.
Sir, good afternoon. I'm Nath from PayPal. Sir, you very rightly pointed about the potential of e-commerce. We talked about domestic a lot. What is your view on micro enterprises being able to use the benefit of a single global market using the internet and exporting it? That's the business we are focused on, but it doesn't get talked about. I think something is left on the industry side, but also the government highlighting it might be a good idea. Just wanted your thoughts on that.
No, it's a very important point, because actually no country in the world has grown without exports. Many of us start talking about growing on the back of domestic markets. It's not possible. There may be a global slowdown, but India's share in global exports is just 1.5%. Look at Japan, it penetrated the American market. Look at Korea, it penetrated American market. How has China grown? It's not grown on the back of domestic market. The Americans opened up their market to China to make it a more responsible nation. But China went and just penetrated America by sheer size and scale. So I think we must be very clear that India can't grow at 9 to 10% without penetrating global markets. And the reason for that is that whatever you get in the domestic market, you get 10x of that in terms of unit value realization on exports. So India's ambition must be to do size and scale. You know, if 79% of your production is small size and medium size, you can't do. You need to scrap your labor laws, firstly, to grow in size and scale. Secondly, Indian startups may be good for domestic market, but the startups must start thinking about penetrating global market. I rarely come across startups who are thinking in terms of global markets. But that's the key. That's important to talk about. That's important to tell them that no country in the world has actually grown without exports. And therefore, it's important to do exports. Every crisis is an opportunity. So you might talk about a global crisis, but it's a huge opportunity for India. And we should do this. And PayPal should play a major role in this. Actually, the reason why small suppliers in China, handicraft suppliers, handloom suppliers, textile suppliers, all of them became big because they hooked on to Alibaba to supply. The great achievement of Alibaba has not been that it's become a $200 billion company, but that it's been able to create an ecosystem of small suppliers around it. And that's what all these digital companies must do in India. There's no point saying there's Flipkart and there's Snapdeal and there's Paytm and there's PayPal. All these companies have no meaning unless they don't reach out to rural areas in India and provide access of digital technologies to small suppliers. Every single handloom supplier, every single cottage supplier, every single toy manufacturer must get hooked onto companies like yours. That's your role. You want to grow big in India, that's the only way.
Thank you, sir. Very well led. Sir, I will just add to...
Sir.
Okay, thank you.
I'll end with one final question. Niti Aayog works with state governments and is trying to nudge state governments into doing innovative things. How easy has it been to persuade state governments to move to digital payments and a digital ecosystem? What have been the opportunities and challenges?
I was secretary DIPP and I was pleasantly surprised that to work, I worked with all the states and I found it very fascinating to work with states on ease of doing business. We were dismantling rules, regulations, procedures, acts, and every state has acted. You create a sense of competition, you start naming and shaming them, you start ranking them, every state acts. Today on ease of doing business, every chief minister is taking meeting, every chief secretary is taking meeting. So it's become a passion with them to make themselves easy and simple. Now we are doing ranking of states. We've just going to roll it out on education, health, water. But I think we need to do a similar kind of competitive index to measure the delta, that is the change states are making in digital payments. That will drive big time change. And that will be the key to making India a digital nation.
Extremely good idea. Fine, sir. We've run out of time, I'm afraid, Mr.
One short question,
last question.
that is allowed.
I worked with sir when I was Special Commissioner Industries. Please allow me to ask a question. I was raising my hand sitting here for 5 minutes. So you are a kind of iconic civil servant. We worked with you on ease of doing business in Delhi government. I was Special Commissioner Industries. Now I'm Special Secretary Home. So Kenya, with its Safaricom, with a very large informal sector, a developing country, can have a very successful mobile banking. And India, you have a cash-based economy, which is more than 90%. Why can't we have the same model, the Kenya model of Safari.com to India, when you have 90% of the economy which is cash-based? What prevents us? Can't we give licenses to the non-banking sector?
Yeah, I think we've taken, and I talked about some of the measures. We've taken a series of measures right now. And I think RBI has taken several measures. UPI, etc., have been pushed by them. The government is pushing for a lot of, the JAM Trinity. It is pushing for DBT. It's pushing everywhere. The Prime Minister himself is quite a techie. He is pushing for change. And I think we are in the midst of a revolutionary change. And actually, 2-3 years down the line, probably you will say that many other countries should emulate India. And that's why I said that our ambition, our hunger to become a digital nation should be so enormous. And I like the passion in your voice that why should 90% of the transactions should not happen through digital payments. And I think that's what we should push for, that by 2025, every single transaction in India, cash must be made dead. That's the only way we'll have accelerated growth and inclusive growth. Okay.
Thank you. So cash must die. That is the message we... Thank you so much. I'd now like to invite my colleague Samir Saran to present a memento and to use the Twitter mirror for a selfie with Mr. Kant. Ashok, come here. All three of us.
then we'll get you to sign this. Sure. Good afternoon, ladies and gentlemen. If you could take our places, please. We welcome you to the panel on creating the digital last mile, innovations, solutions, challenges, opportunities, threats in the creation and execution of this last mile and whatever it can lead to. Our moderator today is Ratna Vishwanathan, CEO, Microfinance Institutions Network. Our speakers, Osama Manzar, Founder and Director, Digital Empowerment Foundation; Shantanu Mukherjee, Chief Innovation and Strategy Officer, Janalakshmi Financial Services Limited; Abhishek Sinha, Co-Founder and CEO, Eco India Financial Services; Jagannatha Kumar, CEO, Reliance Foundation; Pawan Bakshi, India Lead, Financial Services for the Poor, Bill and Melinda Gates Foundation; Venkatesh Kini, President of Coca-Cola India and Southwest Asia, is on his way, I understand, and is likely to join us very soon. But I'll hand you over to Ratna Vishwanathan, our moderator. Ratna, it's all yours.
Bang. Okay, so good afternoon, everybody. I'm really happy to be a part of such an, what shall I say, live conversation that's happening all over the country today. I think in almost every sphere that we're looking at, every transaction we're looking at, every platform that we're looking at, the big buzz in the room is about digitalization. Now, while that sounds really nice and very progressive, I think somewhere we also need to step back and take a look at what exactly do we mean by digitalization. I think it means different things to different people, and the models that people use would be very specific to what they seem to be doing. Unfortunately, I think somewhere along the way, the word digitalization has acquired a kind of ubiquitous connotation. So when we say digital, we are not really, I mean, from the perspective where I come from and where we deal with this on a daily basis, when we say digital, nobody's really clear about what they're saying when they mean digital. Having said that, we also have a population in the country where a large part of this population is left out of basic essential services like health, education, and basic services. And that population is what I think everybody wants to aim at. And so we come up with this word, last mile connectivity. Considering that the predominance of the population that needs to be educated on the whole digital conversation is this population that people are reaching out to, whether through business, whether through banking, whether through other platforms, in my opinion, it should be the first mile and not the last mile, because we need to work backwards from the basic unit of the need of the client. If the entire digital conversation is not client-centric, I mean, it has to have the client at the center of the conversation. And the client is a very varied animal. There's no one client. So having put all this on the table, the fact remains that today, I think the government has put out 1,800 crores to educate almost 40% of the rural population, which is about 6 crore people, and spend about 300 rupees per person to educate them, give digital education. What is going to be the relevance of a digital education? Is it just going to be another training exercise with neither a platform or a use inside? We need to look at all these aspects. We need to discuss, we need to talk about various parts of what we mean by digitalization. Today with me, I have a very interesting panel. So the people on this panel represent different parts of business, different parts of services, and they use technology differently. So I would hand you over to this very erudite panel that is with me today. To begin with, I shall request Abhishek. Abhishek represents ECO, And I'm not going to introduce any of the panelists because I think the introductions will be at, on the screen behind me as they keep coming up. And Abhishek actually is the founder of payment, what shall I say, system called ECO. ECO is basically a technology platform that uses different vendors to pass on technology in terms of bringing down the cost of transaction. So I would now request Abhishek. Abhishek, I believe you have a film and that you'd like to play. So if you'd like to go first.
So why don't you start and... This video is a great example it is a video based on a pilot project of which ECO was a part, and is a great example of how we delivered small value credit or working capital loan to merchants or retailers in a manner which was paperless, presence-less, cashless, and the disbursal was absolutely closer to real time. And so in this pilot, 3 organizations were involved. If you could just, there was Capital Float, which was like a marketplace offering, just like Make My Trip offers you tickets from multiple airlines. Capital Float is a marketplace which is offering loans from across multiple providers. And so the customers had the option to select their language. And if you could start the video again. So they could select the amount, of how much loan they wanted. And this is an important screen. We all download apps without even realizing what we are consenting to. And as part of this architecture, the consent layer was extremely important. And here, the user consent is being taken for 2-3 things. One is to read their SMSs or their text which is appearing on the smartphone for recharge, for banking text messages such that one gets to know of their balances and movement of money. And finally, so ECO is a company which, we are a prepaid wallet company now, and we started our business as a business correspondent. And basically, we are a cash wallet. So we are in the business of converting cash into digital, primarily for customers who earn in cash. And they don't get salaries dispersed electronically as most of us in this room would get. So these are people who earn in cash either on a daily, monthly, weekly basis. And we convert their cash into digital and then allow them to avail of multiple transactions. Basically, the endeavor is to open up the digital economy for people who are earning in cash. And so for the retailers, so ECO has a network of about 15,000 retail points across the country. And these retailers are the front ends for the customers to convert their cash into digital. And because these loans are primarily meant as working capital loans for the merchants, they are also collecting data, transaction data through the APIs which we have exposed. They are collecting transaction data of the merchants with ECO. So basically, we are seeking the customer's consent here to read their SMSs and on the smartphone to get access to their transaction data through data providers like ECO. So I'll again go back, there's an entity called Capital Float, which is a marketplace. There's an entity called ECO, which is the data provider. We are also seeking customers' consent to collect data which is appearing on their phone. And this data is basically their recharge data, the banking data and financial transaction or payment transaction data. Let's go ahead. So let's again stop. So this data, all the transaction data, the banking data is being used to make the assessment, the credit worthiness of the customers, because most of these customers are still not on databases like CIBIL. They are trying to get access to formal credit for the very first time. And so, so one is collection of data. The second is, because we have now over 1 billion people enrolled on the Aadhaar platform, the KYC is being done completely electronically. When we started the business way back in late 2007, we used to get paper forms filled by the customers. And these paper forms would physically travel to a place where they would get digitized, they would get scanned, and these papers had to be stored in safe locations. And just the process of this entire paper used to make the customer acquisition cost closer in excess of 70 rupees, if I remember correctly. And now that cost has significantly come down, because all what we are trying to do here is collect the electronic KYC, so establish the identity of the customer completely through Aadhaar. So the customer enters the Aadhaar number, their name, and if we go ahead, this information is sent to Aadhaar. What you get back is a OTP from Aadhaar. As soon as the OTP gets delivered on the registered mobile number, so most of us who have put our Aadhaar details have also given our mobile number, so that OTP appears, that gets verified. So what this does is that now the loan application form gets pre-filled with the picture, because this information from Aadhaar is giving us access to the picture, to the name, to the gender, to the address of that individual. And now these basis the transaction data, basis the KYC, now you're getting the offers. So if you see there were two providers of, so Capital Float was playing two roles. They were not only the marketplace, but also one of the loan providers. The other was Aditya Birla Finance. So there's a marketplace, there's a data provider, there's a loan provider, there is a consent layer. We are using the Aadhaar database first to establish KYC. And then as we move, so these are the offers. Now the customer selects which loan they wish to avail. Let's go ahead. So now let's go ahead. The banking details are being filled by the customer where they want the loan amount to get disbursed. So this is now an important step. So every loan most of us would have had access to loans in the form of credit card, personal loans, and multiple other types of loans. We also made the agreement electronic. And again, this electronic agreement was signed through e-sign, which is again based on Aadhaar. So there's an agency, eMudra, which provided us with this backend for e-sign. And again, there's a process for OTP. Let's go ahead. So this is the agreement which comes. So it's a very simple process, and the loan gets disbursed. No paper, no people, completely presence-less, paperless, and almost closer to in a real-time manner. So that's the pilot which we ran all through May, June, July. And now we are ramping up this. We are trying to get more loan providers. We are trying to get more marketplaces, more data providers in the ecosystem, such that the data can be a lot more enriched. And this is getting access of formal credit. You know, just to give you some sense, there are people who need daily working capital loans, and they are raising capital on a daily basis.
I'm sorry, I'll have to interrupt you, sir.
As high as 5%.
Move on to the next speaker, sir.
Yeah, we're done. Thank you.
Okay, and now I would like to move on to Mr. Jagannath Kumar, CEO, Reliance Foundation. Welcome, and it's great to have you here on this panel this afternoon. The question that I have for you is, digital payments leave, not just payment, the whole digital platform leaves a lot of people out of its purview in terms of rural households, aged people who are wary of technology, unorganized sector players who really, I mean, don't have either the access or the time to be dealing with this. So how do you think that this entire digital platform is going to help them in any way, enable them in any way to have better access, better understanding to services, particularly coming from the fact that they have very little access to basic education, let alone technology and other things?
Thank you. Let me address this in two ways. First, by sharing an experience that we have, talking about the literacy levels and the capability to read. While most people have mobiles, still most people in the rural areas are not literate, particularly the sections of the people that you are talking about, the aged and so on. So the way we address this is when we want to reach out to people, we are reaching out today to over 2 million people through their mobile phones. We reach out not through text messages. We provide very important, valuable information for them to improve their livelihoods, for better health care and better, I mean, if they are students for educational purposes and so on. Of course, they can read, the students segment of the population can read. But for the rest, we started doing voice messaging. That's an easier way to understand for them and to act on, rather than trying to figure out how to read a text message that comes. So that's a simple change that we brought about in terms of reaching out to the people. Now, that basically leads me to think that we have to still rely on simple ways of implementing these solutions. While digital infrastructure, digitalization are all tools, eventually the success of this whole approach, the platform, all of these will be there at the last mile for everybody when we really take the word digital from it. Let me explain why I'm saying this through an example. If you ask someone who has been born in the last 15 years, let's say, and ask them what a digital camera is, I mean, they will think that everything is digital. Where is a camera in the first place? I carry my phone. My phone is everything for me. So the concept of digital camera, which was started before that was seen as a way of life, is dead. So it's camera, and then it's no more a camera as well. Most people carry phones, and the phones have cameras. So it's about phone carrying out the function of a camera now. So when we simplify the solutions to that level, where we make that an integral part of the day-to-day life of people, in terms of how to use things and not make it distinct from how they live, that is when I think the concept of the digital payments and digitalization, the entire ecosystem will work, for which we need to create that ecosystem both from innovation point of view, so far as the product and service delivery is concerned, as well as the infrastructure and so on. And Similarly, you got, all of us were used to, rather before most people became literate, it was all thumb impression. Today, authentication is through the same fingerprints. See where we are going. So that's the level of simplification we need to bring into the implementation if we really want to succeed and get the last person to use the digital infrastructure, digitalization, all these tools that we are talking about to get the benefit of the digital payment system. That's the first part. And through that comes the rest of the acceptance part of it. Any amount of education by itself doesn't help. It is about the acceptance that this is a way of life. And that's when the segments of the population that you are talking about can easily adapt it and use it like anybody else in this room. Thank you.
Thank you so much, Mr. Kumar. And now I would like to move to you, Osama. You call yourself a digital missionary, which in itself is a very intriguing term. Now, considering the fact that we are talking about access to health, access to education, access to other things, using a digital platform, somewhere along the line, we also need to look at the provider of these services, whether they have been equally enabled to provide these services, because just reaching out through an app to a service that at the end of the day doesn't have the infrastructure support to provide that service, in itself, I wouldn't really call a digital revolution. So what are your thoughts on that?
Okay, I don't know where did you hear that I call myself digital missionary. I'm not. But yes, just to quickly tell you, I belong to an organization, for many people who may not be knowing, called Digital Empowerment Foundation. We work in about 170 locations in 22 states and 80 districts, and purely last mile in most of the places where no connectivity exists. So what I would be talking is fair amount of digital last mile, what you call, or last mile that we are discussing. The one question that I would like to ask myself and all of us is that what is the last mile? Because according to the World Bank, 1 billion people are unconnected in this country. So they are fairly mild and, and still called last mile and whatever, huge population. So is it the last mile with connectivity? Is this the last mile with non-functional connectivity or non-existent connectivity, or not even considered to be existent? Because they are fairly big in number, very, very big in number. And I'll give you a couple of data just to put ourselves in perspective. 80% of the people are not connected in this country. This is a hard data, perhaps 90% as far as the functional connectivity is concerned. About half of the mobile connected people who have got 3G do not even use internet. This is a fact that remains, that are we culturally even there? Because the reason I'm saying culturally is because payment comes in a very cultural manner. You don't start paying online the day you get connectivity. It's a very, very serious issue when you say connectivity. Not more than 60% people are connected even by mobile in this country. 72% women are not even have any device of connectivity. 72%. And now if I take you to all last mile, 3 million panchayat people not connected, 250,000 panchayats are not connected, 1.4 million schools are not connected, all the health centers are not connected. So actually we live in a very, very unconnected, very human society in this country. Because now we are also being considered as data. So I don't know whether you are human and data. So that's very interesting era that we are getting into. And another fact that I don't know how much we have calculated, a person who live in poor area, they pay 260 rupees for a printout. I don't know whether we have thought about it very seriously or not. 200 rupees because he cannot work the day that he has to take a printout. So he has to forego that day. And this is not a one person's, this is 400 million people I'm talking about. When they have to take a print, and the reason is that he cannot survive without taking a printout, because e-governance has created a situation of everything available online. So if you want anything to be done, you need to take that printout and you have to go and take the printout, and he has to go a few miles.
and pay few 10, 15, 20 rupees as a rent of traveling, and then he pays 10 rupees cash for a printout, not like us 75 paise or 1 rupee or 2 rupees just next door. That's the irony of exclusion, I'm saying, because it is very good to say that, you know, yesterday we were 100 million, today we have 200 million, our Indian growth is 200 million, I mean 200% in about 1 year time and connected. With this speed, we are going to take 50 years to be connected society, and culturally, I don't know for how long. And when we talk about digital payment system, and we are talking about converting people into not only being online, but also thinking of paying online and digitally online, it's a cultural issue also. Because otherwise, the day you give the mobile in the hands of the people, they will start operating, you know, everything online. So I just want to highlight that it is very, very important to figure out the last mile linkage or the absence of being connected, number one. Number two, how long does it really take for them to culturally convert them into behaving cultural, because digital? Because when you're digital, you have to be more transparent, you have to be more accountable, you have to be more, you know, interactive, and all of them, unfortunately, is not a culture, you know, that we have really experienced in the last, you know, 7 decades.
Now you know why I called you a missionary. Thanks, Osama. All right. Now I'd like to ask you, Shantanu. So you work with Janalakshmi. You're the Chief Innovations Officer. It's one of the largest MFIs. It's slated to become a small finance bank very shortly. It's growing very well, doing very well, and you've invested a lot in technology. I think with last year there was some 500 crore investment in technology, which is a large amount. Considering that a lot of your business today you have managed to take onto a digital platform, right from where you collect the customer information to the last mile payment that you're making out to them. Now, how has this use and investment of technology worked out for you in terms of does it make the entire customer identification process easier, quicker, and the deduplication process of clients easier, number one. Number two, the costs that were initially there, which were transferred to the customer, have they been able to come down in any way in terms of rates of interest by investing so much in technology?
Thanks, Ratna. So I think just before I jump into the question which you posed, and I think I just wanted to sort of, extend the discussion which Osama and Jagannath mentioned. The way we look at it is that we define digital India into 3 broad categories, and I think not us, but I think it's there. One is what we call the digital natives. It's typically our children who are basically born with, digital phones, iPads, iPhones, mobile wallets and things. Then you have what we call the digital migrants, which is typically would be most of the people sitting around this room who we were born in an analog age, but actually sort of migrated to a digital thing. And the third is where the world in which we live in, which is the microfinance world, which is we call it digital refugees, where people are yet to sort of cross that divide, which is there. So in our case, and I completely echo with what Osama is mentioning, is that when we look at it, is that whilst the smartphone and other phones are growing in exponential manner, the fact of the matter is that, and even, in fact, our organization primarily serves the urban underbanked segments. It is not even, we are not going to be in the rural. We have got some few pockets in the rural, but primarily, even within the urban unbanked, what we are seeing is essentially that let's say about the penetration of smartphones is not even about 30% or 35%. And even where you have the smartphone, which is 30-35%, nearly about 50% is what we call a dark phone, where people use a smartphone, but there's no data. So I think that's where the fundamental challenge comes in the whole digital transformation. So I think the way we look at technology, and Ratna is right, that we have, as Janalakshmi, have been early adopters in technology. We have invested significantly. We'll continue to do that. There are 2 reasons behind it. One is that powered the growth of digital transformation, which is going to happen in our customers' life, and I'll come to a couple of examples of that. But also, more importantly, is also how do you make processes and other things which is much more simplified in order to sort of ensure that you deliver a solution or an offering to a customer at a quick turnaround and a low cost. If you look at the microfinance world, especially which is primarily the group loan customers, it is essentially very less of it is credit risk. The primarily what is there is basically managing the operation risks of the business. And the fundamental thing is how do you control your credit losses or NPAs, and that determines as to whether are you making, is the business viable or not viable. So one of the things which we have moved towards, and this is to answer Ratna's first question, is to, we have gradually over a period of time has invested in making the end-to-end process as far as digital as possible. We've had such a situation where we introduced biometrics. It was before really Aadhaar actually sort of became mainstream. All our internal customers go through a biometric authentication, whether in terms of the onboarding or collection process. We have introduced, all our field staff carry phablets now, and we have just rolled out countrywide in almost in about 220 cities, where all our executives who onboard customers carry phablets connected to Bluetooth biometric readers, which are essentially sort of used to onboard. We have, through this process, one of the issues which we used to face in terms of when we used to onboard the customers was essentially the difficulty in the data quality. Because earlier what used to happen is that all the CIS forms and everything used to get filled in papers, and those used to get transcribed. So the quality of data was not there. Everything was being done, KYC and everything is got manually done. Now the entire data from the onboarding of the customer till the entire credit bureau check, soon to come the eKYC, the automated sanctioning process, everything is now automated. And finally, when the customer sort of gets cashed, even the payment of the loan or disbursal of the loan is now also digitized. So one of the things which we have done is completely sort of eliminated the paper on one sort of business. We also give customers, one of the things which has happened in this process is that not only sort of it has brought in us the technology and operational rigor in managing our business, but has also sort of helped in terms of reducing the turnaround time, which over a period of time will ensure that the disbursal of the loans is going to be significant into that. We are into an investment phase. We will continue to invest. We believe that the path to digitization, especially for the unbanked and underbanked customers, cannot be a transformation from purely an analog environment to a mobile-based payment. It has to be through the assisted route, which means, when I say assisted route, means that customers will do digital transactions, but these will be facilitated through digital sort of intervention. For example, what's happening in maybe the Echo shop, what's happening in the agent locations, where customers go in and sort of do digital transaction, but it's been assisted by a Kirana shop in the city. So that is something which will progress over a period of time. With regards to a technology cost, there is an investment to the cost. It will take time for those to mature, for us to get the economics of scale. That will come in as we grow. And over a period of time, overall, the cost of delivery or cost of unit economic cost will gradually come down.
Thank you, Shantanu. And now coming to you, Pawan. So basically, just to take off from where Osama left, about 80% of people not really being connected in the true sense of the word, and also the whole cultural context, because working with low-income households and people at the bottom, I mean, I hesitate to really use the word bottom of the pyramid, but people in low-income households. Now, as a part of international development, how do you see this whole cultural change? Because it is behavioral change, I think, primarily that needs to be brought about. Connectivity is one part, behavioral change is the other part. Very small things like security, for instance. Not understanding the veracity of owning a card and the fact that you don't share that PIN with other people. I've seen clients who use, they laminate the RuPay card and keep it thinking it's some kind of an award that has been given to them. So there is, a whole host of things out there which are completely loose and, with ends trailing. From your perspective as part of international development, working with low-income households. How do you think this entire digital conversation is going to pan out?
I think first a couple of things. I don't agree with Osama on the number, on the amount of digitization. I don't think that's a correct number. I'd love to see some of the data and the evidence around it. I travel around the country, and my last visit last week was deep rural in Bihar, in a village called as Khetapur. And we guys were there, where it's a small village, 400 households, less than about 2,000 population there. And we asked the women, have you got phones? And they said no. Absolutely understandable. It's a social norm issue. Women don't own phones. So if they don't own phones, how are they going to be connected or start doing transactions? But the men have phones. And surprisingly, they had data connectivity in the village. So we asked the women, do you use this phone? She says, of course I do. And what do you do with it? We use YouTube to download recipes. Yeah, that's being used, right? This is deep down in Khetapur and not in our households, right? They don't have toilets at home. They still use phones. The question is, when you go digital, what is it that you're offering to the customer? Are you going to push him and say, you have to use a phone? Or are you going to give him a need which will solve for his problem to be able to use a phone? How many times did any of the telecom organizations actually go down and tell a villager, you must own a phone? They didn't. But why do you think that India sold 1 billion odd SIM cards? Right? There has to be a need which these consumers saw, and hence they went and took it up, right? I'm not saying that we have full coverage across the country, that everybody has a phone, everybody uses it for thing, but we guys are connected. We guys are definitely connected. We also saw an interesting experiment in Andhra, in Godavari West, where there is an initiative from the government which is teaching the people how to use email, WhatsApp, or YouTube, and the other things. Most of the SHG members of the village know how to use email and WhatsApp amongst the group members and relatives outside the city. So it is need based. But I think the two questions which you asked is that what does digitalization mean and what does the last mile mean? And I'm going to stick with just the financial part of the story because I'm not an expert on digitalization, I think, across the chain. India is far ahead of rest of the world in what we've got to achieve today, right? So if you look at the India stack today, which I called as payment connectivity stack, the ID system stack, a regulatory stack, and a policy stack. This has all come together, and which will deliver a lot more stuff in India, and the rest of the world is today starting to see what India is doing and how will it deliver stuff. So you have guys from Tanzania, from Bangladesh, from Uganda, from Indonesia. They're all looking at India and saying, what are they doing and what does it mean? So I'm sure that if that's happening, then we guys, I believe, are looking at something which is important enough. The second thing is, why are we talking about the last mile? We're talking about the last mile for sole one reason, that we still deal in cash, right? What is it that we need? And that's the reason, how do you send cash to deep rural parts of the country? Today, RBI flies helicopters to send cash to the northeast. Why do they do that? It's because we are not digital today. We don't have any other means of reaching that cash to those guys. How will you deliver this if it's not digital, right? So there has to be, and since it's an ecosystem thing, it's a chicken and egg story, you say, shall I first go digital on handing over the cash digitally, or shall I first build an acceptance sort of network, right? It's a chicken and egg story, and a classic one. Even if so the last mile today, at least on financial services, is needed for you to dematerialize and materialize from cash to e-money and back, right? Now, has there been a change in the recent past which could change this? It has. And the change is, is the unified payment interface, which could actually change the complete landscape of this country. What does it do? All you need for that is a smartphone right now. I'm sure there will be down the thing. You need a bank account, Aadhaar card, and a mobile phone. And you've effectively told 14.5 million retailers that they can seamlessly accept digital money from anybody who has a bank account. Right? That changes the entire ecosystem. How long will it take? We hope that the payment banks who have licenses will start coming up now and move deep into this area and deliver that stuff. But that is still a hope, right? Now the question is, what is the role of a philanthropic organization in a space like this? So we care very deeply for what you said. It could be a wrong use of the word at the bottom of the pyramid of most people who earn less than $2 a day. And we believe all lives have equal values. But we sort of believe that cash is actually the enemy of inclusion. And we say that for the sole reason that how much can you save in cash? How much can you save under your bed? How much can you save in a sugar pot if you have a sugar pot at home at that point of time? How much can you save? Will digital allow you to store that money safely and squarely when you need it? Of course you can. But for that, in the current set of status, you need a last mile for them to be able to be safe and trustworthy. The other thing which Abhishek also spoke about and Shantanu spoke about and you referred to as well, when you go digital, customer protection is really important. Right? It's very, very important to keep the trust in the system, to be able to ensure that they don't get treated in the wrong way, and they are able to do things the way they're supposed to do. That is a mechanism which will evolve. It's not there yet. So that's where we get involved. And the second way we get involved is, if you look at today the ecosystem of developers in the fintech world, you'll find a lot of them doing a lot of great stuff. But is that aimed towards the bottom of the pyramid? It's not. That's where such philanthropic organizations like us come into play to say, can we change the focus a little bit and bring it down so that you can work at the bottom of the pyramid as well? Yeah, thanks.
Okay. So thank you, Pawan. But to just go back to your question on the cash issue, people like us who walk into a mall have the wherewithal. We still prefer to use cash. I think a country, we are culturally inclined to use cash. So it is not about people at the bottom of the pyramid or at the last mile being hesitant about the entire microfinance system runs on cash. And half the reason that, this entire digital investment, etc. is happening, the biggest risk in the system is cash, is to pull cash out of the system. But having said that, anytime you go into a Kirana store, you go into your local mom and pop store around the corner, he's not accepting a card. They want cash. We ourselves, when we walk out of the house, are not only carrying plastic, we are carrying cash because we know there are little bits and pieces where only cash works. So culturally, as an economy, I don't think we can really stratify that so-and-so segment of the population is more inclined to use cash as compared to others. Yes, certain 12 to 15% of us, yes, we do use plastic a little more aggressively than others do, but the fact remains cash is here and will stay for a while. So the whole transition, you have platforms, you have the stacks.
Just one question here on you. How many POS machines do you think we have in the country?
I really don't know. Shantanu, maybe you could tell us.
1.2 million machines. Right. How many stores did you think we have in the country?
You tell me.
So you should. It's about 14.5 million. So if most of the stores don't have I think a POS machine to use, where do you think you can use it?
No, it's not about the POS machine.
That's a chicken and egg story. So that you need to answer.
Pawan,
that's why
I don't think it's really so much about having the POS machine. Let's be honest. I mean, people feel comfortable using cash. People who walk into a mall have a card. And people, I'm sure the stores all have POS machines. And yet I've seen wads of notes coming out because we have various things that we need to address to, not just cash in the economy,
not
but
at the bottom of the pyramid,
in the
because the
economy
reason
as well.
I'll tell you why, I think at the bottom of the pyramid they have no choice. You have a choice and you make a choice.
Even
They have no choice.
Okay, so it is then, oh, I agree with you. See, we are talking about cash. I'm not talking about the choice or the lack of it. It is just that culturally as a country, we tend to use cash. To change that thinking, whereas you and I have access, like you say, the people at the bottom of the pyramid possibly don't have a choice to even change the thinking for us, for it to trickle down. I think itself is a challenge, and particularly I think Shantanu will probably bear me out and Osama will bear me out, that cash in the system, unless it is addressed in a particular way, will for a long time stay. Shantanu, what would you like to say?
I hope not.
No, I agree with you. I think there's, both what you're mentioning and Pawan mentioning is there, and one of the things which, I'm just going up, I'm stepping a bit ahead beyond maybe the microfinance and everything, but if you see one of the use cases which is there available, worldwide is the case of Korea. And one of the reasons why Korea sort of has moved, has got one of the largest penetration of the PC. I don't know what it is now, must be close to about 75 or 80% PC is through this thing. And I think there's another country, I think Iceland or something, where it's about 100%. It is because of the legislation which was passed in Korea, which mandated that certain transactions has to be per se be transacted electronically, which is those days was basically your credit or debit card. Now what that did was essentially what it spurred the growth of acceptance, which I think if I'm not mistaken, last time I heard it was, in South Korea it was there a small country which is, I don't know what, 1/4 or 1/5 size of India or even less, has got close to about 25 to 30 million POS devices. And what happens, you require certain amount of policy and the government interventions to do that. Just a final point, I think Pawan alluded to it, and I think UPI has we have got a chance to do that. Because what happens is that one of the fundamental issues has been in this country to grow the POS infrastructure is the cost of the POS devices, which I think cost anywhere between 300 and 50%. And I think Amitabh Kant also alluded to that. If you can actually sort of find a way through a digital with the propensity of the mobile going on, if you can find a way, combination of UPI or some other technology, to make payment ubiquitous and also interoperable, I think that's going to start seeing the transformation which is there. But having said that, human nature will be there. You will carry cash and spend cash.
Okay, so what I will do is now just pose one question and get quickly everybody to react to that. Osama, you wanted to say something?
Yeah, I just wanted to say to Pawan is that he didn't agree to me, but I agree to him as a matter of grace. The reason is that what story you told is all true, but what I told is a number. I have 1 million such a story for the last 13 years that we are doing. Beautiful, heart-rending story that how connectivity solves serious problems and, adopt entertainment and so on and so forth. But it's a matter of bigger number of the country when we are thinking of that when we are connecting people, it needs to work. Take it biometric itself and this POS issue itself. We have Aadhaar-owned people, poor people in the country who have got Aadhaar number. When they go second time to avail it, their biometric doesn't match because they are working people by hand. And not getting one visit, your entitlement is a serious issue for them. I mean, for us, it's a number. That is what I was trying to highlight, that what we are creating a solution needs to work meticulously and not experimentally all the time. That's all I'm trying to say.
Would you like to react to the conversation going on?
2-3 points to make. One is that because we work with customers in this segment, I think what we have understood is while there is a cultural thing, the reason most of us in this room have adopted to digital money is the fact that fungibility, which is conversion of digital to physical and physical to digital, is very conveniently available to us. If somebody says, no, I will not accept digital, you walk into the nearest ATM, you take out cash and you give. So that fungibility is very conveniently available. And because the fungibility is now so ubiquitously available to people who largely live in larger cities and towns, has what helped us adopt digital money. And so as long as we will not solve the problem of fungibility, adoption of digital money does become a challenge. So it is, and the point is, in our business, people don't see the value proposition in Echo converting cash into digital. They see us as somebody who's making cash more efficient for them. So if cash was traveling 10 kilometers or 50 kilometers from the place of work to your place of residence, now that cash, that physical cash, you don't have to carry over certain kilometers. You can convert it closer to where you live, where you work, and then transport it in an electronic manner, which is a much safer, efficient manner, get the money onto the other side in matter of seconds or minutes. So it's about making cash efficient is how they understand. We are still far away from, culturally and even getting the value proposition of digital money to them is just about making cash efficient. I personally experienced this in Kenya. I was in an Uber ride, and this driver said that, in our conversation, he said that we also accept cash as in India. And then he said that 90% is cash and 10% is card. And I said, you guys are M-Pesa country. And he said, that's what I mean when I say cash. And I said, okay, how much of M-Pesa cash and how much of cash? Again, 90-10. 90% is M-Pesa. But M-Pesa doesn't appear as a payment option in that Uber thing in Kenya. So it's all about making cash efficient right now. Even after so many years, for M-Pesa in Kenya, it's all about making cash efficient, nothing else. The other thing on the infrastructure side, I think we have multiple types of entities. At the top of the hierarchy, you have a universal bank, followed by small bank, payment bank, prepaid wallets. Unfortunately, while these are very good, the regulations tend to leave gaps, which leads to opportunities of regulatory arbitrage. The regulators and the policymakers have to be very careful. I don't want to get into details, but there are just a lot of loopholes because of which leaves gaps of regulatory arbitrage. That is it never ensures a level playing field. And the other thing is, business correspondent is a lost opportunity in our country. We all want to become the largest in the fastest possible time. One of the platforms which has achieved that is Android, because they opened up themselves in many ways. Again, I don't want to get into details, but it is very important for banks and large banks to see, because it was a very startup move by a large company like Google. Banks have to open it up in ways that Android has done.
So thanks, Abhishek. Now to move on to you, Mr. Kumar. So Pawan did mention the 4 stacks, which are IT, business, regulation, and policy. Now, as somebody who's been working with payment gateways, with digital options, and especially with large underserved populations, now what are the gaps that you see in these 4 stacks that actually would provide a hindrance to rolling out the digital story in a smooth way?
Let me address that by connecting the various points being made by the panelists here. First, about, just as I said, about death of the word digital from the ecosystem will make digital more successful. I would say the death of POS, death of ATM as concepts is what would lead to the success of this whole thing. That is where the investments and the efforts will have to go. Let me explain this. If you have the stack working well and you have the entire infrastructure and ecosystem working well, every phone is a POS, every phone is an ATM, effectively. You are doing your merchant transaction using your phone and interfacing with the bank. You are making payments to merchants or your service providers or whoever else, or to your friend, family, whoever, through the same mechanism. So why do you need all these things? So it would need, connecting Abhishek's point, this is about also banks opening up in terms of giving access. Of course, they need to have the firewalls, required firewalls, so that the security is taken care of. End of the day, they need to protect the consumer's interests in terms of their protection of their money and so on. So they need to have required firewalls, but at the same time open up for development of the required apps for people to use this very effortlessly in a seamless manner. So it's not about cashless, presence-less, etc. You got to be seamless also in the whole delivery system through a simple device called the mobile phone today. As I said in the beginning, just as you don't think of camera as a separate device, you should not think of an ATM or a POS or a bank or any of these things as different entities. That's the way I would end that.
Thank you. And I think we're almost out of time, so let me just wind this up. I mean, we've talked about various aspects of the digital platform. Mr. Kumar's take on how it should not just, we shouldn't embody the whole thing as digital, but take it away and deconstruct it into something that we understand, bite-sized pieces that everybody relates to. Having said that, of course, everybody's talking about UPI and how it's going to be the next best thing and the interoperability. And I think one also needs to look at the fact that despite Jan-Dhan, a lot of people still don't use banks. They're terrified of going into brick and mortar structures, which is why things like reaching out through mobiles, reaching out through, door-to-door service delivery, which is one of the models that probably microfinance uses in the best possible way, is still something that we are dealing with. Mobile wallets today can be accessed by people who don't have bank accounts. The moment it goes onto a UPI platform, you remove this chunk because it has to be backed by a bank account. So there are lots of things that are happening, and I think as a country, we really need to sit, wait, watch, and see which way all of this is going. We have about 5 minutes for questions, so I would like to open up the space for questions, and please ask your questions to the panelists by name. Thank you. Yeah, good one. So Pavan's question is, do we have any questions?
No, I was just wondering, the whole day we haven't heard any discussion on domestic remittances and what does the digital ecosystem do to that? Labor, migrant labor, as well as those who work in urban centers send money back home, and how is their life, or what is that potential market? Are we exploring that? I'm Sameer Saran, I work at the Observer Research Foundation.
Yeah, thanks for that question. We have always heard the number as anywhere between 1.5 lakh crore to about 2 lakh crore per annum. But I was shared a number very recently that M-Pesa in Kenya and bKash in Bangladesh transact close to 700 crore rupees, Indian rupees equivalent on a daily basis. My company today does probably in the range of 14 crore, 15 crore rupees on a daily basis. So that's the gap we have, or that's the opportunity we have to address that. But primarily, one of the biggest use cases for the service which we provide is for migrants in cities like Delhi, Bombay, and 100 other such cities, tier 1, tier 2, because one of the biggest needs for them is to send money back home reliably, quickly, and in an economical manner. And I think companies, including Echo and some others, are really trying to provide that value proposition to the end consumer.
And also, I think, Sameer, the introduction of the whole payment bank ecosystem that's supposed to be coming in with the connectivity provided by mobile wallets and other players in the area, it should ease out this whole process. Of course, even today, it's cost. The last mile, as we keep saying, the last mile delivery is the cost factor which is creating the biggest hindrance. Any more questions? Yes, please.
Yeah, I'm Shashidhar, I work for Basic Subke. I've been hearing, I think there's I don't know if it's a confusion or it's a mix-up that we talk about electronic money. I mean, when we say digital, are we talking about plastic or are we talking about mobile electronic money? Because when we're replacing cash with plastic, I think in my mind, we are increasing the risk of money a little bit more than the risk of actual physical cash in hand of a person. Because you have a risk of identity theft when you are actually converting cash into another physical item to be used, especially in a rural economies where the value for PIN, somebody mentioned that, is not as much, and they rely on somebody else to use it. So what is the right transition? Is it straight away from cash to mobile or electronic money, or should we still need
this plastics as a medium of transaction. What do you guys think?
Yeah, you know, in an ideal situation, what you said is right, that you move from cash to, and I think some of the M-Pesa models is basically that. So you basically convert cash to digital or digital to cash at some point of time. But I think in reality, if you look at particularly specific to India, cards or plastics are not going to you know, go away very soon. So I would presume it will continue to coexist for a while till the mobile becomes ubiquitous, you know, for both, for not only for, as I said in my words, the digitally natives and migrants, but also for digital refugees. There's enough sort of, you know, acceptance points where people can sort of exchange digital with digital rather than having to give cash. And finally, the whole interoperability, because not one player can actually sort of, you know, build that network. It has to be multiple networks and, you know, one. So I think there are a few things which is there. It'll take a while. It'll take some time. And it's not going to vanish. Plastic is not going to vanish very soon.
So we have time for exactly one more question. Yes, please. That's the last question for today.
Hi, Badal from Catalyst. My question was, have you guys working at the last mile established a link between digital payments and financial inclusion as a whole? Right? So access to broader financial services, credit, insurance, pension, etc. And if so, I would love to kind of hear some thoughts around what the mechanics or the logic of that change is.
So today, Badal, there is no cashless at the last mile. So, you know, and you guys are doing this work, the USAID guys and Dalberg guys were involved in doing this activity. I'd love to hear those examples to show how your pilots went and impacted that. So our evidence is that as I said, cash is the enemy of inclusion. And I'll give you an example. It's anecdotal though, but let me tell you, I was in the Krishna district where they're running a pilot for a PDS, which is digitized on POS machines, and you could pay cashlessly. I saw both the one where you could pay cash and pay without cash. On the one where you could pay with cash, I saw this old woman who, after having gone and taken rations, was sitting in the sun. And I asked her, why is she waiting? And I needed a translator. So she had bought the rations, which cost her 44 rupees 88 paisa, right? And she had gone and given her a note of 50 rupees, and this guy didn't have any change, and she was just sort of waiting, because that balance was her lunch or travel back home in the bus fare, right? On the other side, when we went onto the cashless thing, this guy just came on the bicycle. He bought the goods, put his thumb there, because Aadhaar is integrated now with his bank account. He made the payment, he got the receipt and walked away. 5 minutes, is the entire transaction. So we believe there is an impact, okay? And how much is the impact? What does it really mean for them? It's still work in progress. I think we'll need to get there, but I think the the headlights are that it has an impact.
So I think, thank you, Pavan, and I think with that we come to the end of the session. So Badal, you ask the last question, because I think the next session is yours. Thank you all so much for being such a patient and nice audience. Thank you all the speakers on this podium. I mean, we have had our moments of, but we enjoyed it. Thank you so much.
So let me take this opportunity to now invite Mr. Badal Malik, CEO of Catalyst, to give a short presentation and inform us about a new partnership in this space. Badal, would you like to speak from here?
Hello, can you hear me? Okay, good. I thought I'd make it a little more informal by standing in the middle. So first I want to thank the organizers, both the Better Than Cash Alliance as well as the Observer Research Foundation, for giving us this platform to introduce ourselves. Maybe I'll start with a little bit of about the genesis of Catalyst. In 2014, Prime Minister Modi and President Obama initiated a strategic dialogue between both countries to start thinking about solutions to solve financial inclusion. Subsequently, in November 2015, an MOU was signed between the Ministry of Finance and USAID to start working on interoperable digital payment instruments or models to drive transactions that involve small businesses and low-income consumers. So that's the genesis. Since we've embarked on a program of innovative and insightful experiments, and we've collected behavioral insights on how merchants as well as consumers pay or get paid or save or access credit, etc. And this is where now rubber hits the road, the way I see it. So Catalyst has been formed now to operationalize those learnings. And our premise here is that we see payments as a water balloon. Right? So you could think of it as the payments gubara, right? But if you squeeze it from one end, something else pops up, right? So fundamentally, we see this as an ecosystem that needs to be addressed as an ecosystem, right? And therefore, we intend to crack these coordination problems that have blocked digital money penetration by addressing geographic ecosystems and working with stakeholders in those ecosystems and core use cases in those ecosystems to actually push the needle. So the goal here is to really take an ecosystem and demonstrate something like a 10x increase in digital payments, and in the process build an actual replicable, sustainable, scalable template that then can be scaled across. Right. So the way we are going to do this is really choose an ecosystem. Right. That could be a small town, right, or a tier 2 city, let's say, for starters. And then form a laboratory, right, and work with a set of operational partners, right, as well as facilitate fast-paced experimentation, because I think, as the panel before me, sort of said, there's still a lot that we don't know around the mechanics of change. So the objective here would be to work in a very startup kind of mode, bring partnerships, and leverage a lot of fast-paced experimentation to find what actually moves the needle, and also then institutionalize that and scale that template more broadly. And there are two types of experiments. So on one hand, we want to work on technology and business models that actually lower the cost to serve, help supply meet demand. Right? There's a demand piece as well in terms of literacy, in terms of interfaces, etc., that need to be made more accessible for particularly low-income groups. And then second, on the institutional side, to promote what is called evidence-based policy, right, which we don't have enough of. But this laboratory could also help policymakers experiment, try things, tweak them, validate them, and then scale these policies. One other thing that is clear to us is that we can't do this alone. So we intend to work very closely with a set of strategic as well as operational partners, and so I mean, hopefully many of you in this room will be working with pretty closely, and I encourage you to come and talk to us and partner with us. There are quite a few Catalyst folks in the room. If I could just request them to raise their hands, you can go and talk to them and get more information in terms of what we're doing. We're also we're setting up the plan, so it is an open invitation to come and help us actually design it, so that you have ownership in it as well. And then finally, I'd like to end by kind of making a pitch for this report that we just published with a partner, iSpirit. Sorry, I always get that wrong. Again, sponsored by USAID and managed by Dahlberg. This is quite a groundbreaking study, I think. It actually proves that, at least technologically as well as in terms of business model, that a 5-minute loan approval process is possible, right? And this is just the start, obviously, of something that will hopefully we'll see a lot of action around in the weeks to come. I'd like to actually introduce, also just have Sanjay Jain and the iSpirit team. Okay. Yes, okay, and you are on the next panel, so you'll hear more about this. And Varad from Dalberg is here as well. So thank you very much, and look forward to working with all of you. Thank you.
Can I request the panelists for the final session, the valedictory session, to join me on stage? Sanjay Jain, Ruth, Minister Kero, and Arvind Gupta. So we are starting this session, I think, 20 minutes late, but we'll try and make up for time. We'll do this quickly, if this paper stays on my lap. What I want to say by way of opening remarks is that I took away 4 key messages in the previous 3 panels and the inaugural session. The first, of course, was when the minister emphasized that the 2 big projects that his ministry is engaged with, one is banking the unbanked, and the second was delivering government subsidies and government payments to beneficiaries with a degree of efficacy, is going to drive and implicate the digital ecosystem. We are moving towards that. Of course, the panel that followed and the first panel, that is, spoke about opportunities, trends, certain challenges around the regulatory and legal space that are required to be responded to while moving ahead. Mr. Amitabh Kant was quite bold and seemed determined that we should be cashless by 2025. He was a proponent of what I would call digital disruptions and a post-revolution. And I think that was the key message coming out of his intervention before lunch. We heard the last panel, the last mile panel, and I think one of what Pawan Bakshi said was really important. Digitization will work, and you will see adoption if you solve problems, if you offer solutions, and if you keep it simple. And if you can do this, you will find people adopting it. And finally, there was a powwow as well, and we saw this battle between technology and culture vis-a-vis the adoption paradigm. But in all, what I would say was that what the 4 questions that have been raised in the previous conversation are one about the political appetite, which for me seems to be quite strong. There is a technical and logic ecosystem that is maturing, that is in place. There are certain regulatory and legal issues that will need to be responded to as this expands. And what is the appetite in the startup and investment space around this particular sector? So we are, in a sense, going to give a license to everyone to comment on everything they have heard, to challenge it, to critique it, to respond to it. And in that sense, you can pick the part of the conversations you like. I will prompt you with a question, but you can ignore me if you want. Let me let me start with Sanjay Jain first. Of course, when I hear Sanjay Jain's name, I think of India Stack. I don't know why, but so I will obviously prompt him to speak on India Stack. But certainly, you have the license in the next 5 minutes to talk about anything, including India Stack. Sanjay, over to you.
Samir, I actually have some slides. I would love to have them. Could you please start the first one? So what we saw earlier today, we had this video, which was actually part of the same pilot that we did in the field for the cashless, presence-less loan. And I would love to remind you that basically the India Stack contains a bunch of APIs into the government systems. There are multiple government partners in this, each of whom owns and operates that API. And while this is built on the JAM platform, the presence-less layer is about the ability to authenticate yourself and prove your identity without having to be in front of any particular person. The paperless layer is about the ability to transact, whether it is by providing an identity document through eKYC, to sign an agreement through eSign, or to exchange any other documents through the DigiLocker. And then finally, you have the cashless layer, which allows you to transfer money between 2 individuals or 2 entities through the banking system, either through IMPS or UPI. All of these are APIs with which people can build applications and can then enable excellent use cases to come to life, one of which we saw in the video today. And finally, because we are going to go from being data poor to data rich, we want to make sure that all data is shared with user consent. And so we have a consent architecture in the works, which is where we work through a formal mechanism of obtaining user consent in a provable manner and then utilizing it in this exchange. And then there are many use cases on top of it, some of which you have seen. Could you have the next slide, please? And I want to talk about data that is there in the system today. This is sort of a dashboard for the India stack. We have about, this is a few days old, so we have 1.05 something billion people with Aadhaars today. And this has been about 6 years. 2.6 billion authentications have taken place in the system. And this is 470 million unique Aadhaar IDs have been used in this, which means about half the country who have already got an Aadhaar have in some way, shape or form used it. So it's no longer theoretical. 150 million eKYCs have been done in the system. About 50 million individuals have used this. And that again tells us about how popular this is getting. This was launched about 3 years ago. It is a less frequent transaction than authentication, of course, but it's still used. The Aadhaar payments bridge, which is the means for direct benefit transfer, has 320 million Aadhaar numbers linked to bank accounts. This means there are at least that many individuals with a bank account who have linked an Aadhaar number to it. So most of them have also used it to receive subsidy. That's the reason to do the linkage. But that number I don't have. But 320 million people have linked that account. There's about, eSign was launched only about a year ago, 15 months. And we've already had 1 million digital signatures done through that system. This is about 8 lakh, that's 800,000 people have individually used this. The DigiLocker was also launched around the same time, 15 months ago. We have had 25 lakh users who have together uploaded 37 lakh documents in it. And this is excluding documents that are recent, which have not yet made it to the locker but have agreements. So CBSE has agreed that they will be putting all of the 10th and 12th standard mark sheets since 2004 into the DigiLocker. And that's, you know, about 10 lakh students every year passing through that system. In addition to that, in Delhi, the Ministry of Road Transportation has agreed to put all driver's licenses and RC books into the locker. And so very soon we should start to see this ecosystem grow. There are 17 other agencies as well who have decided to participate. UPI was launched earlier, about a month ago, and we already have about 300,000 people who have created a payment address in the system. And this is early days, it's still stabilizing, so people are not yet advertising on the, you don't see any ads about UPI. And the reason is because it's still in that phase, as Dilip mentioned. But I'm very hopeful to get that many number of people to come on the system with zero advertising tells us that there is a demand for it. People want to pay digitally. I mean, that's very relevant today. Can I have the next slide, please? And this talks about the ecosystem that is out there with the India stack. There's 20 banks on UPI. On the Aadhaar payment bridge and the Aadhaar-enabled payment system, we have a different number of banks, lots of rural banks and cooperative banks. So about 800 banks in the Aadhaar payment bridge and 120 on AEPS. We have only one DigiLocker provider today. We're expanding that. There's an ecosystem workshop this week. We have 3 eSign providers. We have about 150 KYC user agencies. We have about almost 300 authentication user agencies. And the UIDA officials tell me there's about an equal number of agencies in the works. All of these folks are out there taking the stack, trying to build use cases around it, and we really believe we are at the start of this journey. So I'm actually very hopeful. The data tells me that there is actual pull happening. This is not push. And the other thing is we have anecdotal evidence. As part of iSpirit, one of our members runs something called Digital Desh, where their first version, they went from Kanyakumari to Amritsar by road and stopped at every small town on the way. And more recently, they do more focused surveys. So they did Delhi, Agra, Mathura kind of thing, and somewhere in MP as well. And they just stopped it, ask people what's on your phone, why do you use it, what do you do with it, a very qualitative survey. And it's worth seeing. There are people out there, there's police officers getting to crime scenes with Google Maps. There's people saying, I don't need a passbook because I have it all on my phone. There's a school teacher who learned how to fix a PC before he bought a PC. Just because he knows he will not get any service. It's incredible stories. These are anecdotal evidences, and somebody mentioned there were 1 million anecdotal pieces. Well, we at least have a few thousand as well of people who are not in the city, who are pulling digital services because they feel that it will help them make progress. And we have this saying, India won't wait. I mean, we don't need to push. Agar hum nahi karenge, they will do it themselves. they will find a way to pull anything that is useful to them. It's up to us as an ecosystem to build things that are useful. And if we do, they will pull. I'm very, very hopeful. I'm very, very positive. And I think, the entire government ecosystem and the regulators are listening to this pulse of the people and responding. And that, just increases the hope.
Thank you very much, Sanjay. Can I come to you, Minister Kero? You were sitting patiently through much of the proceedings this day. As a minister in charge of looking at some of these digital options for the state of Punjab, are you excited by what's happening, and how is the state responding to some of the opportunities?
First of all, thank you very much for giving this opportunity. The state of Punjab is transferring about 45,000 crores every year as direct transfers. Probably makes us the biggest in the country to do this. We handle, I was mentioning earlier, close to 35 million tons of grains every year, more than what Canada exports and more than what Russia exports every year. We, in a single day, commencing from today, will be buying on certain days more than 1 million tons of grain in a day. So we are handling a logistic operation which is probably the biggest that is carried out of grain procurement in the world. For us, money management is a tool of controlling the logistics of the entire state. 40% of the National Food Security Act's sourcing is done from the state of Punjab. So what we find is that to be cashless is very necessary. It helps us control our procurement systems. It helps us control our inventory. It helps us control our billing system, because even a single days of delay of billing or procurement costs us crores of rupees. And the good thing is, like was being mentioned earlier, probably we are the largest user of cashless. And the good part is that all services are free to us by the banks. We don't pay for the POS machines. We don't pay for the bandwidths. We don't pay for the cards. Our NPCI doesn't charge us. I was probably among their first customers way back in 2012. And I want also to know that MasterCard was our earlier collaborator. Unfortunately, RuPay offered us 0 payment terms, so we went to RuPay. So it is not about just logistics, it's also about auditing. In government, your every transaction has to be audited. And digital transactions leave a very good auditable trail. Whom do we pay? We have around 10 lakh farmers. We have 25 or 28,000 commission agents who are aggregators. We have about 75,000 trucks which transport. We have a labor force about 5 lakh people. We have about 3,500 different processing units which make paddy into rice. And of course, we supply it to FCI. FCI itself only procures about 2% or 3%. 97% of the procurement, or maybe 95% procurement, is done by the Food and Civil Supplies Department of Punjab. So each step, each payment, each account is registered with us. We have POS machines. Probably the maximum transaction per POS machine is by our department. We only have about, I think, 3,000 POS machines. We do business of 45,000 crores. So that is the business per POS machine we offer. We don't use any specific card. We use an ordinary debit card issued by the banks. We have 6 acquirer banks whose machines we use. We have 16 or 17 issuer banks, and we have 68 banks of consortium who lend us the money. So among this ecosystem, the transporter is paid directly into his cash account. I mean, the unions which run the truck, they have registered accounts, and we transfer through an advice which is generated every day at 12 o'clock at night. The day's dealings are cleared, and next day, 10 o'clock in the morning, we issue a file to the consortium head bank, and by 3 o'clock, 4 o'clock, we have put money into at least 25, 30,000 different accounts with SMSs to us. I was listening to, about Eco Step and the way they do. The good thing about our department is that we are the people who are putting money into the accounts of farmers who are then going to be using that money to buy services. So essentially, it starts from us. We are the first mile and the last mile. We are giving money to the farmer on the border who is getting evacuated today because of trouble with the neighboring state. We have to procure his goods immediately, put money so that he is safe, that his money transfers with him to whichever location he is evacuated to. We have to be very quick about, often I've asked banks that why don't you do the lending through us? We are paymasters to 10 lakh people. You have an NPA among the rural area, your NPAs will disappear. We are paymasters, have an agreement with us, we'll deduct that money against the loan, pay you the interest, put the rest of the money into the other account, and we'll also do a subvention for you. The 3% subvention can also be done by us. So apart from this, we are running the food program, NFSA. For us, NFSA to succeed is very important because our entire grain is picked up under a minimum support price. The more successful NFSA is, the more sound the MSP regime will be there. So our penetration in the food account is 99%. 99% of the beneficiaries, or maybe 98, of the people who get food grains under NFSA have Aadhaar numbers. Every family member, if we count, we are at about 90% who are Aadhaar based. We have electronic cards. We are also signing, we are in the process of not taking cash money. We are going to be taking transfer of money directly from the beneficiary's Jan-Dhan account into the government's account. This was one way we felt that the Jan-Dhan accounts will start becoming operative because 55% of the population of Punjab is under the NFSA program. So that makes it, and these are the people who generally have the Jan-Dhan accounts and whose Jan-Dhan accounts, as the criticism is, don't operate. So by giving them grains, we are in a way almost helping them use their accounts. We have business associates sitting out there who put the money in the accounts for them at that place, but the transaction that occurs is through the electronic field so that we have a digital trail. It's not only that we are pushing for cashless, but you want a digital trail that the money has been taken from the account of the person who is the beneficiary as well. So it helps us reconcile our thing. Moreover, collecting money, from 1.5 crore people, 2 rupees per kilo, and then depositing in an account is very expensive. And also, you cannot take a statement every day that how much money has gone in. For us, it is a necessity. So we are trying to create a model which we hope that the rest of India will also follow, because we don't pay anything for this entire system that we have put into place. Thank you, Ji.
Thank you, Minister. That was a very comprehensive presentation on the multiple implications of going digital and at multiple levels how it transforms how society conducts exchanges.
Can I just say one thing? Minister Karan, you're completely inspirational. I just want everyone to give you a round of applause because you've made a huge difference.
I want to now come to the startup space because there is a lot of activity in that particular domain. And I want to introduce Arvind Gupta, who's not on on your agenda, but Arvind is the technology evangelist with the Bharatiya Janata Party, and he's been mentoring certain startups in this particular space. He and I made a go of a startup some time ago, but I guess it failed because of me. But Arvind, why don't you share some thoughts?
Yeah, so thank you, Sameer. I have two disclosures I think I should start with. Number one, I've been with the digital payments 15 years ago. And so I launched a virtual card, and it's so inspirational, as Ruth said, to hear a minister of a government of India talk about being an acquirer, issuer. 15 years ago, this terminology was not known to the best of the technocrats and evangelists anywhere in the world, so let alone the government. And secondly, that I am a founder member of iSpirit, so iSpirit. So that is, it's very fruitful to see where we have come from 4 years ago or 3.5 years ago when we launched. So very inspirational. But to summarize, I think what I see and what I hear and what my views are is that I think it's a true coming of the government becoming a biggest startup. And I think it's North Block is marrying Silicon Valley. Seriously, I mean the amount of technology usage and the consumption of technology that is happening in various government departments, which is signified by North Block in terms of the financial ministry being housed there, is really very the real story to tell. I think all the governments have led and walked the talk in terms of consuming this innovation that came about, led by Jan-Dhan accounts, by the Aadhaar movement of identity, this whole India stack adoption. I think the government has been the first big consumer of the same and has in a way walked the talk of being the disruptor in this whole fintech, government to citizen, disposal of money. And as the Honorable Minister was saying, that is the first starting point. I mean, if you remove cash from there, the whole supply chain can become cashless. And I think that is where we are moving to. You see startups trying to intervene at all stages now. So the government has said we are seeding the money. Now startup ecosystem is taking over. The fintech ecosystem in India, Sanjay probably can add, or Abhishek who's here, is perhaps the highest in the world and at a level which is very frugal. Because of the India stack, it is actually at a cost which is not there anywhere else in the world. And that's the second message. What the resistance to cash had been because of the huge transaction costs associated with card transactions, for example, with debit card transactions. Minister made some very important point. They moved away from MasterCard, did you say, sir? From MasterCard to RuPay, right? Because of the transaction cost. So the message has been that if you bring down the cost of transactions and make it more affordable, more frugal, I think the adoption goes on very rapidly. The differentiation between cashless and cash transactions will really disappear. And I think the startup ecosystem has really done that. Today we are not doing 1 cent transactions. We are actually doing 0.1 cent transactions in India. And somebody just told me NSDL charges about 5 paisa for doing a ping, for doing an API call, which is unknown, unheard of anywhere in the world. The second point I want to make is, as we speak, the government actually just disclosed the numbers of the income declaration scheme in India. The numbers are staggering. We have just, the finance minister, he was here in the morning, he just did a press conference. 65,000 crores of unaccounted money has been declared to the government, which is in the amnesty scheme of 45% taxes. So people are getting to understand how difficult it is going to become dealing with cash in this whole ecosystem. The government's commitment to make the whole supply chain very cashless is showing at all steps. 65,000 crores at 45% tax levels have never been seen in this country. And that's a very significant step of the government's resolve to fight black money, unaccounted money, and this cash economy. You talked about startups. I think my view in this whole thing is that government is the biggest startup, biggest proponent, both as a consumer and as a mindset creator of a cashless economy. And I think we have to, the startup ecosystem, of course, is plugging in wherever the government will not get involved, wherever there is a person-to-person payment, credit lending. But if you see in all stages, there is an application where the government has actually taken the lead and actually has done it. If you again heard what Minister Carroll said, the lending process, the rating, and then actually making the direct payments to the lender is already being provided for, a service that is now, a lot of fintech companies are providing to other corporates, but the state ministry is already doing that. So My final comments are that I think the startup ecosystem is there to support the government in this, and it's really taken off. Today, I said this yesterday and it may be repetitive, we have the highest amount of startups coming out of India. 18,000 plus startups that have been started off in India at a very, very low cost. The venture capital industry in India invested about $10 billion in those 18,000 startups. Compared to that to the US, it is about 4,000 startups, $68 billion. So that shows how frugal we are doing innovation in India. And thanks to the India Stack to create that base level of innovation that everybody can then build upon. So that's where we are. And out of these 18,000 startups, a lot more, if you see, many more are in the fintech space. Last count was more than 2,000. So there's a big leaning towards fintech, and everybody's trying to solve the problem in a different way.
So a lot of solutions are on their way now.
Absolutely.
No,
Thank you.
As a purist, I have a problem. I have a problem when governments get into the business of business. So I'm going to, come back to both Sanjay and you a bit later after I speak to Ruth, that are we giving enough space to others to create solutions, and should UPI be opened up to at a certain time to greater competition, greater market forces, and should government gradually move out of the startup space? To Arvind. Let me come to Ruth and we'll have that conversation a bit later. Ruth.
Thank you, Sanjay, and thank you to my co-panelists who are really inspirational, as I said. What I want to do is to throw back to you some of the questions that I've heard during today. And so please, I'm going to ask for shows of hands as we go. I'm going to have to take my glasses off so I can see you. So first of all, one of the things that was said at the panel just before this was about the need for demand to be generated. And then Sanjay said, well, we don't need to generate demand. It's there if we create the right opportunities for people to engage, because people are ready to engage. And we heard Minister Kairon saying how they're solving problems. They now have an audit trail that they can use through their electronic payments. So they're solving problems. And so Dr. Garg this morning said, if you have ideas for increasing demand, such as audit trail or such as the other, I won't go through all the other examples, but if you have ideas for increased, please let him know. So I'm sure you all have ideas. I know Pawan must have ideas from this morning. So if you have ideas for increasing demand, just on the top of your head, anyone, can I see it through the lights? Does anyone have ideas? So people have, so I see various hands at the back there. So if you have ideas for increasing demand, please email. The email
is btca@orfonline.org.
Great. So there is an opportunity there for generating ideas on the demand side, on the customer side. We've got the stack, so the infrastructure is there, so there's ideas for demand. Second is on the infrastructure side. You heard Mr. Amitabh Kant saying that we've got to go from 1.7 point of service terminals to 20 million in 2 years. We heard people saying, well, the phone is going to the ATM, we don't need to do that. We heard Dr. Garg also saying, if you have ideas for an agnostic acceptance infrastructure, so that there are no barriers in there to generate ideas. So I'm sure of all the brilliant people that we have in the room there are ideas for an agnostic acceptance infrastructure. Again, please email us so that we can do, and I know our friends from Catalyst would also be interested in these as well. So if you have ideas for an agnostic acceptance infrastructure where you do not differentiate between different types of service providers so that they can compete equally as to what meets the demand for whether it's a state government or others, then please do that. And then on the regulatory side, many of you were here this morning and heard Professor Shah saying we've got to really address some of the remaining barriers. There's a lot being done, but there are still remaining barriers. And you heard Rupa Kudra from Omidyar saying, well, how about a regulatory sandbox? And so I'm sure that there are other ideas that you have for addressing the remaining legal and regulatory barriers to generating an inclusive digital ecosystem. So again, on the third point, please send your ideas. If you like the idea of a regulatory sandbox, you know that Joint Secretary Michaud is here and others are here who were very interested in your ideas. So please do those on there was a challenge for everybody on those action points. And I should just say that the inspiration we heard from the state level, there were other requests from states, such as documenting good practice. I think we clearly need to do that. The challenge of getting everything in multiple different local languages, the challenge of connectivity. So there are lots of challenges that need to be worked out at the state level still, and those were heard. But I think the three issues of demand, infrastructure, and regulation are still challenges that we need to take action on to be able to move forward. So those were my very quick summary points.
So in the next round, I would like you to answer one question, that how do you see this India conversation implicating some of the other countries that you would be visiting and you would be working with in terms of the larger mandate of BTCA. But let me come back to, for 2-minute interventions by Arvind and Sanjay on Mike Poser. Is government crowding out, or at some point will it have to cede space to new investors?
Well, I think government has seeded the market, right? It's created a market, it's seeded the market. I totally agree with you that, if it can move out and there's a better solution that somebody else can implement and execute at a scale that the government is envisioning, the government will move out. But right now it has seeded it, walked the talk, and that was the first step taken. If the government didn't take the very first step, there wouldn't be any believers. So that is a very important point to take and appreciate.
Sanjay?
I actually believe that government is a big part of payments. A lot of payments are between businesses and governments, people and governments, and even the government pays out. I mean, you have all these RFPs and the tenders and these payments, and they all have to go cashless. So, I mean, it's not that the government is crowding out startups, but the government is a big player in the payments ecosystem, and they have to believe that they can go completely cashless. It is almost a prerequisite for this revolution to take place. The one point I do want to point out is about the will. I mean, there was this point about 10, 15 years ago, some may not remember, when we decided we are going to dematerialize stock market certificates. We used to have pieces of paper, which are the stock certificates, and there's a massive process to buy, sell, do whatever with them. And in one fell swoop, it was decided that there's too much fraud, too much other issues with it, we have to go electronic. And that process took 4.5 years. And at the end of that today, nobody even thinks of a stock certificate as a piece of paper. We are actually at that point where you ask somebody who's coming in fresh into the market, stock certificate is not a piece of paper. And we have to get to the same point. I mean, Abhishek mentioned a story in Kenya where cash is M-Pesa or M-Pesa is cash. Why is there a difference? And we have to get to that same mental model, and I don't think it's cultural. It's really about, people having the opportunity to take those decisions and make it happen.
So can I add to what Sanjay said? It's a question of also in the trust, of course, issue of it, but I think the government is doing enough in terms of, or should do, it's probably going to do a lot more in incentivizing cashless transactions. And I think that's the role the government has to keep playing, and that's the mindset change that is gradually coming up. And people are trusting the system. One number that, Sanjay presented those numbers of 32 crores, 320 million people actually having their Jan-Dhan and their accounts linked, is the number that the other sub number of that, which is very important, is the number of ration card owners who have linked themselves to the cashless transactions. Complete bottom-up usage of transactions with the ration card. And this is all voluntary.
So let me ask.
So one more, I did have a point about competition. Certainly we would love to see more competition. I think, when Ajay talked about competition, he was asking, why is there only one NPCI? Why can't there be more? But I actually felt like reminding him, we already have Visa and MasterCard. It's not that they're not allowed to compete in the country. Right. And yes, it would be great if there's a technology startup that could stand up and billed under NPCI and if RBI would allow it. Now, that's something which has to be tested. Somebody has to go to RBI and say, I want to build the payment switch. And Ajay believes that RBI would not be open to it. I don't know. And we would love to see it tested.
Fair enough. So that's a test that has to be undertaken. Mr. Minister, you actually, in a sense, gave us a large number of stakeholders that you have engaged in this process. Where do you think the real pushback has come from, or has there been a pushback? Because you're doing DBT, direct benefit transfers, you are paying your transporters, you're paying a number of other people in the supply chain through cashless systems. How has their response been? Because there was a conversation here that certain parts of, there's a cultural issue about adopting some of these solutions. Have you found any resistance or any problems with any of these stakeholders in here?
No, we didn't. Sorry. See, we didn't impose a system. We co-created, we would like to believe. We got everybody who was working with us to sit with us, and we said, this is the system we are devising. This is the way you're going to be working. You want to change it, please tell us. We will modify it. The performers we made, the screenshots we did, everything that we did was in consultation with all the people we were dealing with. For example, commission agents in Punjab are a very, very strong union, probably among the strongest. The entire local economy runs around them. They are the money lenders, they are the aggregators. They know more about a person. They do what rating companies do. They credit rate every person they lend money to. So it was important that we had them on board, and we didn't want to offend anybody, because systems don't work by imposition, they work by acceptance. And they have to add, like we all know, add value to their own enterprises. Then only will they be accepted. So we spoke to them and we showed them the models, like I said, the screenshots, the presentation, time taken, how much time it would take for them to do the data entry, whether it would reduce their cost, how quickly would they get their TDS returns, that they would not have to for inspectory Raj, they don't have to go to our offices, that everything happens in the mandi itself. And also we can measure the time taken for each transaction, which would help them. The time taken by us when we buy the produce to the time taken when they get their payments. So all that was regulated. So we also happen to be the largest buyer of jute bags in the world. We buy about 35% of India's jute production. We pack close to, I think, about 50 crore bags. So we have to track those bags also. There are 4 categories of bags. I know it sounds ridiculous. There's a quality bag, which is the new bag. B is once used in one season. C is twice used. Then we have plastic bags. And each bag's inventory has to be maintained by us. In 25,000 people's, who is packing in what, then storing in about 3,000 locations. Then obviously, like I told you, carted by around 75,000 trucks. So for us, we can't ignore the trucks, the truck operators. We can't ignore the labor. We can't ignore the banks. Nobody can be ignored. And all systems were cross-checked, improved upon each season. Every 6 months, we get a chance to change the software. So what we do is that the POS machines are reloaded with any improved version we get of how to do the billing, of Food Corporation of India's acceptability. It's very difficult to push them into accepting it. They were the most difficult, rather. We had to use Government of India to push them to come onto a portal to give receipts, because unless and until an agency doesn't give receipts, the entire sanctity of your stock management doesn't come in. We buy, we sell, but the buyer has to enter and say, yes, I have received these goods. So that we only managed about a year ago. And then the quality of grains they buy, how much moisture, how much broken, all those performers are set by the Food Ministry and by Government of India. So even they have to be incorporated. What is the value cut that will be done if the grain is found to be broken beyond a certain percentage, if the moisture is more, and how is that amount to be debited, to whose account is to be debited? All that financial transactions are also put into place. So, sir, nothing can be done without everybody's acceptance of the system.
And has anyone documented this? Because this is a fascinating transformation. I think that's a research
we're going to. We're obviously going to.
So obviously we should be doing this. I think this is a fascinating story to document. Ruth, coming back. That's work for us. That's right. Ruth, coming back to that question. So Minister Jaitley said this morning that this is a valid model, the Indian model. He didn't go as far as saying that this is exportable, because government of India is not in the business of exporting their national operations. But what is your takeaway from what you're seeing happening here?
For those of you who picked up some of the reports at the front desk, you will have seen our most recent reports that's called Accelerators to an Inclusive Digital Payments Ecosystem. And we did research in 25 different countries as to what the key accelerators were. And about half of them India is doing, and about half of them India is not. So the ones that India is doing that are great examples for the rest of the world that are exportable are, of course, Aadhaar, the biometric ID. How many members come to us and say, how did India do 1 billion? You know, what can we learn from those? So that's obviously number one. And identity, it's now one of the G20 high-level principles. It's now recognized as an essential part of building an inclusive digital ecosystem. The issue of digitizing routine cases, the DBTs, you're doing that. So that is a clear accelerator. The issue of digitizing all of government payments, it's still in process, but that is clearly an important accelerator. So yes, that is a great example. The issue of, as beginning to happen with GST and others, is digitizing government receipts. So that's a clear way forward that you're working on to accelerate digitizing payments. The ones that are still to be worked on are merchant acceptance. Many of us have talked about this already, how much a difference, particularly in the Kirana stores, as people have been talking about, is developing that. Mr. Kant this morning was saying this is a key area that we need to work on. So merchant acceptance. The infrastructure issue, I mentioned that was still a challenge. You know, how can we think about really building out the infrastructures? Maybe it's a shared infrastructure. There are lots of ideas for that. Dr. Shah talked about interoperability. So that's still an issue that is not fully sorted out. So there's progress, but it's not fully sorted out. And then, of course, the question I made earlier was incentives for digitizing, that there's still work to be done there. So parts of it are great practice that others are wanting to follow, and then there are also still areas that can be worked on.
Excellent. The minister wanted to make an intervention.
Question asked was what government should enter or should go out. See, sometimes government have a great advantage. Out of sheer size, please don't misunderstand me, we bullied the banks into giving us free service. Because the volume was so much, we said, we tendered that you will do it at zero cost, you can go below, you cannot go above. So I was told that we already have the business, that why should we tender for zero also? So to which I responded, I said, it's not uniform across banks, I'll take it from some and give it to the others. And I think that worked for me. I was reported to Reserve Bank of India by some banks that Punjab is making us pay for services for which we should be charging. Majority banks out there supported me and said we are doing it voluntarily because we are making lots of money from this system because there is no float. Government is not taking hit on float. So when governments come in, we save public funds from losing out. Now we do, if we get a permission to distribute the money, let's say even at 11 o'clock from RBI, by 6 o'clock we have passed through the Ministry of Finance, Government of India, through the banks, through NPCI's settlement portal, and by 6 in the evening, the money is in the bank account. I don't think any transaction can be faster than that starting from RBI, it ends up in a beneficiary's retail account at 6 o'clock. So governments are very important part of the ecosystem because they help in putting money into retailers' accounts who then moves ahead and works on.
Thank you, Mr. Minister. So what we'll do now is that we have maybe 5 to 7 minutes. I've already taken the liberty of extending our session till 4:15, so maybe 5 minutes more.
why don't you come back to us, either with a question or with a suggestion? I think Ruth, in a sense, outlined what she looks to hear from many of us in the room. So if some of you have a point to make, do so. If you have a question, please ask so. And don't feel shy.
Actually, I have a suggestion.
Please.
We say that we have 1 point something million payment acceptance systems. We have 200 million smartphones. Why don't we say we have 200 million payment accepting devices?
Each device is a part of.
Why do we need cards? Why do we need
ecosystem.
any
Fair
of
enough.
those?
Anyone else?
I'll also make an intervention here. I think with GST also coming into play, which Ruth mentioned, and I was keeping it for the end, I think this is the game changer. In fact, I think with the 4 layers that Sanjay presented in the India stack, the 5th layer is the GST transactions layer. The amount of data GST would produce from a completely data poor country, I think will become a very, very data rich country. So I think we should start treating data as the new cash, and cash must die. That's my view.
Cash must die. I think since you all seem to be tired, and we have agreed that cash must die, and I think that's a good note to end this day's proceedings on. Please join me in applauding the panelists. For, you have a question? No, wait. Before we clap,
Yeah. So let me clap for you first. Congratulations. And having said that, just one point, please. We need to be looking at UPI 2.0, Sanjay. And I think that is important because we need to be able to look at lubricating payments that happen from businesses to government, customers to government, government to businesses. So if we draw a matrix of customers, business and government on one vertical and on the horizontal, we should be able to look at every single use case where we need to have systems such as UPI baked, such that the interoperability is not just on a peer-to-peer mode, but also on the other aspects of how payments can be easily addressed at the front end, rather than having to do that at the back end.
I think that's a good point. I mean, it actually points to the fact that, UPI has just been launched and people have expectations that we'll be able to, take over the entire payment space, and that's a very good expectation to have, and we will try and meet that. So, I think just a matter of the next release, we will.
I think this is a good debate to be having. In a sense, we are already looking at version 2.0. So join me in applauding the panel for their interventions. And please also, I must thank the Minister for being with us the whole day and for his really motivating presentation at the end. Thank you very much for joining us. I think the last word is to the co-organizer, Ruth. In a sense, she's the driving force behind this initiative. And I'm sure there'll be many more such conversations we'll have in New Delhi. But Ruth, you have the last word.
Thank you. So thank you all for staying, especially those who've stayed to the end. It's wonderful to see your dedication to this. As I said, we will be taking the ideas and running with those. And one of the first things we'll obviously be documenting the Punjab case. What I'd also like to do is to say thank you to all the ORF team and as well as my team who've been working on this. So please, I'm going to embarrass you now horribly and ask you all to stand up so that we can give you a round of applause. Please do that.
Thank you.